Welcome everybody to Cannabis10x.
So at the Cannabis10x Capital Pitch event, we come across a lot of clientele that are seeking capital.
I'm the CEO of Conception Nursery.
We have 12 vertically integrated licenses.
We've raised over $2.5 million in cash.
We're expecting $100 million pre-money value.
We're a 65-person investment bank.
We're invested in about 35 companies in the cannabis industry.
We are a venture fund focused 100% on the cannabis space.
Our fund has invested in a number of the more capable software companies. They are, without exception, the most credible of the cannabis producers on the entire continent.
We're going to launch a poll, and we want to know which brand that you would be most likely to invest in.
Well, coming in at number one. Again, a tie. We've ended the poll, and we have the winner coming in at...
Cannabis10x does three things. We work for investors and buyers to create acquisitions. We do buy-side agreements, and we create portfolios and platforms with our investors. We work with owners for two ways. We help them create wealth through franchising or through capital raises. And we work with owners to create exit strategies, to transition gracefully out of their business and hopefully end up with a great sale on the back end. So
we have a goal here of kind of uniting the smartest players in the field right now. We were looking for founders that are very effective at what they do to push air under their wings and provide what they need to get to the next level. And we're setting up, embedding ourselves in the infrastructure internationally to make sure that we can speed that process up when we find the people that we think will make it past that hump. Institutional capital does loosen up, and the acquisition offers and the consolidation will happen. The exits that will be available to be made by the players that we set up will be substantial.
welcome everybody to Cannabis10x 2020, the Roaring 2020s pitch event. We are really excited to have everybody. Jason, you want to start, and we'll talk a little bit about our transition into John Morrison's talk.
Sure. So at the Cannabis10x Capital Pitch event, we come across a lot of clientele that are seeking capital, and obviously, getting an SBA loan isn't on the table right now. So we wind up talking to a lot of investors and family offices, as well as a lot of brands, because we come from another angle on this. We're from a franchising background, where we talk to a lot of retail chain portfolio owners. So it puts us in a pretty unique situation here, where we sort of talk to both sides of the table quite often. So what our plan is here is to align everyone so that everybody's aiming in the same direction and trying to grow the most effective business models that we can find. So today we'll be presenting some of the most effective business models in the roster. There's actually a lot more than this. We're going to be doing these monthly now because we got a lot more submissions than we expected.
Yeah, we're so excited about it, and we'll just introduce Jason Trove,
Holly Ford,
Cannabis10x. So we partnered a little while ago and have continued to create what we feel is a pretty monumental impact in this industry. So we just give you a little theme. I know you've all seen the theme of the old-time movie theater, etc. So the reason for that is we're talking about this being the Roaring 2020s, and I know you've heard that before. So many people have talked about that, but to really take you back, we'd like to show you that in the 1920s, the Roaring 20s, obviously alcohol was legal, and we were having a good time with all of that, and the Great Depression hit. And during the Great Depression, obviously, the country was in a very difficult situation. FDR came in as president and said, I will act swiftly to undo the damage of the Great Depression, and he did. And what he did very quietly was repeal prohibition.
We advocate the repeal of the 18th Amendment.
So with the 21st Amendment, he abolished the 18th Amendment, and alcohol became legal, and it added 9% to the federal government's income. And it funded the New Deal, which actually did bring us out of the Great Depression. Fast forward a century later, 2020, we have a similar economic situation. Ray Dalio says we're going into a Great Depression. We've got a few quotes from him that we found very fascinating. And when you look at that and you look at the entire sea here that we're dealing with, a very plausible way to fund the COVID recovery would be to federally legalize cannabis. The tax revenue that would come in from a federal standpoint would be enormous. So with that being said, welcome to the Roaring 2020s. Let's see what happens.
Today is the first day that lager beer in excess of 0.5%.
Hamish Sutherland, we met a while back here in Canada. He actually has a very unique situation. Not only is he with White Sheet Corp, which is, invest capital in cannabis companies, but I'll let him explain how he's also heavily involved in his own cannabis company himself, which is one of the largest in Canada. Actually, maybe I should let Hamish introduce himself and say a little about yourself. So we have 5 minutes.
Hamish, you've got 1 minute.
I was going to say even less than 1 minute because there are a lot of people on dock. So I've been very fortunate to be an operations leader in the cannabis space in Canada as the 5th licensee. My expertise is more in how the systems work within a building or a greenhouse or an outdoor grow. And the tools, appliances, culture, regulatory protocols, SOPs, et cetera, are demonstrated. Our fund has invested in a number of the more capable software companies, as well as appliances and a biosynthetics firm. I am currently building or responsible for building a large facility in Australia through Asterian Cannabis. We're building an edibles factory in Montreal and an outdoor grow in Windsor. And I'm really looking forward to seeing all the new innovations that your catalog of applicants and presenters will provide today. Enjoy yourselves, everybody.
Thanks so much. Matthew Norgren?
Matthew has a very impressive background. Arcadian Fund, they're heavily invested in space. Some of the most recognized names. I know most of you are familiar with DDS Analytics. It's on their roster. He has a very impressive background. Matthew, if you could go ahead and introduce yourself.
Hey, thanks, Jason, Holly. Glad to be here. I'm going to echo Hamish's statement, which is I'm excited to see what we have to look at as opportunities to invest today. I know we're going to be acting as judges, but as a portfolio manager, as an asset manager, every opportunity to learn more about the industry and see where these great entrepreneurs' minds are going is an exciting time for us. We are an asset manager. Our fund's called Arcadian Capital Partners. We have a couple of funds. We have a number of SPVs. We're invested in about 35 companies in the cannabis industry in about 7 countries, mostly focused on ancillary type products. But we're just excited to be a part of this today. Community is more important than ever before. We all need it. But the cannabis industry is very strong and resilient. And these entrepreneurs are battle tested. It's been amazing. The best time of my business career has been these last handful of years in cannabis because of the entrepreneurs, because of the fact that anything that gets in their way, as an investor group with the entrepreneurs, we continue to find solutions. And at this point in time, they are battle tested, Holly and Jason, and they are ready for anything that comes. I'm convinced. We've seen VapeGate and this and that and COVID and you name it. But this will persevere. The human element behind this industry is way too strong, and Arcadian is just very excited and fortunate to be one of the industry's leading equity funds, and we hope we can continue to show that today.
Thank you so much, Matthew. We're just so honored to have you as a panelist and a judge. Matthew will be part of the 3 judges in their rapid fire as they ask questions in each segment. And I think we have Merrick Weldman.
Yeah. Our final judge is an investor from Wellcan Capital, Merrick Friedman. Merrick, if you're on, go ahead and introduce yourself. We met Merrick in some purchasing endeavors. Are you on there, Merrick?
Yep, I'm on. First of all, I just want to say thanks for having me. And to reiterate what Matt said, very excited to learn more about the panelists and be part of this event. Quick overview of Wellcan. We are a venture fund focused 100% on the cannabis space. We've been around since early 2018. At this point, we have 18 portfolio companies, and we invest, tend to be on the earlier stage side, and we invest in a mix of both ancillary and plant touching businesses.
Thank you for having us, for inviting me, Jason and Holly, and thanks everyone for taking the time to join the event today. I've been asked to talk for just a few minutes about raising capital and money in the cannabis space. So really sort of 4 quick items, I think, just a little bit about the current environment, sources and kinds of capital, do's and don'ts that I would suggest when you're putting together a deck, and then just a little bit of information, a little additional information on the Orion Group. We all know that the cannabis industry really began its run in 2014 with the markets opening up to adult use. Jeff Sessions, of course, came in and slowed things down a little bit, and Canada then sort of took over with a number of large investments, and certainly with the CSE opening up in 2018 and opening up listings to cannabis companies. That was really sort of the beginning of the dot-com boom, if you will, in the cannabis space. If you look at some of the folks that track the space, Tuatara and Viridian, New Frontier, Elo, pretty much all agree that circa 14 billion was raised in 2018. We all know that the music slowed a little bit in 2019 with valuations spiraling downward due to unrealistic forward projections and the fact that a lot of these companies were spending money like drunken sailors. Unfortunately, the markets have remained fairly shuttered for 2020, and of course, the pandemic hasn't really helped too much with that either. But there's been a lot of horse trading as of late, and you just have to look at the news to see that. I mean, there's not only been a lot of horse trading, but a lot of cancellations in the market, right? I mean, Harvest's planned acquisition of Verano, as we all know, was called off. MedMen canceled PharmaCann. Cresco, canceled the VitaCann acquisition. Acreage and the Deep Roots deal was scuttled. Acreage is now probably even looking at divesting of some of their core assets. It's been a lot of change in leadership too, which has made for some interesting news headlines. Hadley Ford, of course, stepped down. Myanthus. Cresco's Joe Caltriano stepped down. Dottie. Adam Bierman, Bruce Linton, list kind of goes on from there. So, what is the good news in all this? How do we climb out of this? And what, is there any good news? And absolutely there is. I mean, there's always opportunity born, out of chaos. And fortunately for all of us, cannabis has been deemed an essential business in pretty much almost every state. So where do you find capital, in this current environment and in this arena? Well, debt is certainly available to you if you can sustain it. The rates are fairly high. Just a couple examples of that. Jushi raised 47 million, I think, a little bit ago at 17%. Curaleaf's 300 million was at 13%. Forefront raised a little bit of, they said they raised 22, but actually 18 of that came out of a sale, but they still raised 4 million in convertible. But at a pretty significant rate. But your ability to raise capital really has to do with your profile and who you are. And so if you're a distressed company, with revenue and assets, there's lots of distressed funds that are being either created or are being created at this point to take advantage of the dislocation in the market and distressed assets. So it's certainly an option for a distressed company. If you're profitable, you can consider doing a merger. I mean, I think scale is going to matter now more than ever. So if you can find a partner or a JV or something along those lines, that's certainly one thing to look at. There's the deals that I've seen. There's basically 4 different profiles that I've seen of people involved in M&A activities. There's a few groups that have capital. There's a few groups that will lock up companies and LOIs and then go out and try to find the capital, which is certainly a model and a structure that worked in the past, but I think that's going to be a bit challenging these days. There's still some activity with the folks up north coming down with their publicly traded shares as purchase currency, which is not that appealing to most. And then we've seen the emergence of SPACs. There's probably, I think at last count, there's 12 SPACs that are being tracked. Scott Greiper at Viridian does a really good job of covering all this, but I think they've raised $2.6 million collectively. Probably not enough time in this particular forum to get into sort of the pros and cons of SPACs. There's a lot to be said on that topic, but that is another opportunity, and they're out there starting to knock on some doors. So there could be some opportunities there. You need to also, if you have assets, you can also think about, there's a lot of REITs out there that are doing quite well in this environment. They're purchasing the real estate and then doing a sale leaseback. There's also issues with that. I would think that most of them have escalators. Most of them don't have any buyback options, and they'll typically lock in at a rate of 5 to 10 years. That should cannabis become legal at the federal level, those rates would be pretty outrageous, but a good way to raise capital these days for sure. Again, getting back to profile, if you're a startup in this environment, a lot of the bets have already been placed. I think it'll be fairly challenging if you're a pure startup, but of course, there's always friends and family that you can focus on. Family offices are a great resource too if you can gain access, but that's typically pretty tough. So a little bit about how to build a deck and what you can do there to try to capture the attention of potential investors. I see a lot of decks like a number of folks on the panel here do, and graphics are good, research is good. You definitely want to tell a story, but you've got to remember that that typically a lot of these most investors are seeing quite a few decks on a daily basis, and so how do you rise to the top? How are you the cream, and how do you rise to the top? And really, for me, I was thinking about this in preparation for this talk today. There's really sort of 3 things that I think you need to focus on. One is the ask. What are you looking for? I mean, so many times, you'll have a deck and it doesn't actually say what they're looking for, which is, that's the whole point of it. So you want to make sure that, that the ask is very well defined, and not to be glib, but investors typically are looking for 3 things. It's how much am I investing? How much am I going to make? And when am I going to get my money back? So if you think about putting yourself in the investor's shoes, if you were investing your own capital, those are the kinds of things that you'd want to understand. So make sure that you're very clear in answering those questions. What are the use of proceeds? Where's the money going to go? And and how much do you need? The other piece is what I refer to as offtake, and that's really just demand and outlets for your product. You can't just create the product and hope that they'll that people will come. So you really do need to define the offtake, and whether that's retail is your distribution, or partnerships, or JVs, or whatever it is, you need to have that very clearly defined. And as a matter of fact, if you have POs or LOIs or MOUs for your product, you can very oftentimes monetize that. You can do that with factoring or a working line of credit or a term loan or some of the options through the ABL lending community. So if you can secure any sort of written interest, that will help your cause as well. And then in terms of risks to execution, you really need to make sure that you define as best you can what are the risks to your ability to execute, and how are you going to address those. So oftentimes we'll see these projections of year 1, year 2, year 3 sort of hockey stick growth, which is great, but again, you can't identify all the risks, but the risks that you can, you need to list those. What are they, and how are you going to navigate those? And that'll show that that you've done some homework and that your team has the ability to navigate those. And lastly, it's very critical in terms of the team and the execution. What are your backgrounds? What have you done in the past? What shows the investor that you have the ability to execute? I mean, oftentimes I've heard a great many investors say that it's the team's ability to execute that's almost more important than the concept of the company and the idea behind it. So that's that's pretty critical too. Again, just how are you positioned to win, and why are you going to win over your neighbor? Is it a barrier to entry? Is it whatever it might be? You really need to focus on on what it is that you can do to differentiate yourself from the rest of the community out there. So a little, I guess, just in closing, I'll just a little bit on Orion. We're the Orion Group is not an investment fund. We're actually a C Corp, Delaware corporation, and we're rolling up healthy vertical operators. And our valuation metrics are based primarily on EBITDA. They're not based on revenue. We will look at branded manufacturers and cultivation, but we're primarily interested in vertical operators. Someone characterized us the other day as MSO 2.0, which I actually like, and I'll borrow it because really we're focused on being an MSO that does not have any trailing liabilities, does not have any debt, and is focused on healthy operators that are currently profitable. So that's my 2 cents. Thanks for listening. If you have any questions or comments, let me know. And thanks, Jason and Holly, for the opportunity. Appreciate it.
Absolutely, John. It was a pleasure is ours for sure.
And now it's 11:30. We're going to start our first B2B pitch.
So my name is Kevin Brooks. I'm the CEO of Conception Nurseries. We are a tissue culture micropropagation business, which is really just a fancy way of saying that we sell little baby healthy clones, and we sell them at a price point that's at or below what cultivators can do in-house. This is a snapshot of some of our plants, our Oregon facility. We're up and running in Oregon, in California, soon Massachusetts. Some of our plants and scientists here. These are our growth chambers, and one of our value props is that we are able to deliver little baby plants, little clones at a price point that, again, is at or below what cultivators can typically do themselves. And these are our growth chambers that allow for that. Conception is a joint venture between Phylos Bioscience, which is the world's largest genomic database holder. We have exclusive access to that database. Our other partner is Crop One Holdings, which is the world's largest vertical vegetable cultivator. They grow very, very small things in-house. And as a micropropagation company, it's a huge net positive to have a partner like that. So what is tissue culture? Essentially what we do is we find the very best of every single strain we can get our hands on. We take it down to the stem cell level, and then we can repeat that, create an exact copy of that plant every single time. Every banana, every blueberry, every almond you've ever eaten in your life has all come from tissue culture. It's a standard in traditional agriculture worldwide. The way we look at the industry, the way we look at cannabis, there are challenges around consistency to the end consumer. Growers are constantly experiencing scalability issues. I don't think anyone can talk to a grower and not have heard some battle wounds around pests and disease. And the current industry, it's very expensive to run these in-house nurseries and mom rooms, and we see quite a bit of market restrictions. Again, just kind of touching on the supply chain, because of traditional cultivators didn't have access to what we would see in other agriculture environments like access to nursery programs, cultivators had to take their genetics in-house and house them in these mom rooms or these in-house nurseries, which introduces a tremendous amount of unnecessary risk. Again, pest, disease all come through the mom room. It's extraordinarily expensive, so specialty nutrients, specialty equipment, real estate, and then again, limitations around scalability. So we see tissue culture as a solution going forward. We create a consistent product every time. Your end consumer is getting the exact same product every time with no deviation. It allows for quick scalability, on-demand genetics, on-demand clones. It eliminates the single biggest risk to the business around talking about pest and disease mitigation, and then obviously, our focus is on cost reduction to the growers, which we think is always very sexy. And then we open up new markets, to different growers. This is a quick snapshot of a clone that came from a traditional mom, what growers are doing in-house versus one that comes from tissue culture. Just from a high level, the tissue clone has a better root structure, tighter node stacking. This would all indicate a larger yield, shorter harvest time, better results, a healthier, more vigorous plant. We offer very simple clones. We offer customized strains. We're doing quite a bit of genetic cleanup. Again, we're operating in Oregon. We just launched California, and hopefully soon by the end of this year, Massachusetts. We've raised, so we closed $3.2 million in our seed round in February of last year. We're just shy of 12 million of our 15 million Series A. Again, virtually all of our 2020 product is under LOI and sold. We launched our California facility last month, and we have product hitting in California in July, and we are up and operational in Oregon.
Perfect. Thank you so much. Okay. Now it looks like we have Sunny Sarpel. Okay, Sunny Sarpel, are you with us, Sunny?
I am with you guys.
All right, get your video going, and we are really excited to have you, Sunny. Go ahead.
Thank you for having everyone. Hopefully everyone's having a magical day. I'm Sunny Sarpal, team lead and director of Agritech Haven International. We are a real estate opportunities fund in Calgary, Alberta, Canada, where we have a 1.2 million square feet development, which is based on a template. Basically, our development has already been approved, and we are a high-powered development where we're providing turnkey facilities for data centers, cryptocurrency facilities, micro cultivators, pharmaceutical companies, cultivators, distributors, manufacturers all around the world. Right now, we know that in the world, there are major economic crises and transparency, and our development is actually meant to support some of these initiatives as we are building a 24-hour security facility. Each one of our buildings is purposely built and self-contained. Our standard specifications include UV lighting, air purification, and mechanical systems. Basically, we are providing turnkey facilities to these wide range of essential and emerging markets for 8 to 10% return within our annual lease, and that includes all the soft costs and headaches. One of the unique opportunities about our development is that we are in Canada and we are in a federally regulated area. We're close to 3 different transportation airports. We have a phase 1, phase 2 development where we're going to have 26 buildings, 1.2 million square feet. Each one of these buildings is completely built on a template where customers can take 1, 2, 3, 4, 5, 10 units. Each one of these units is within a smart community. So tenants can control, operate, and visit their facility all via mobile app. We have upgraded security on the facility because of the regulated platforms. In our development, it has been master planned to have quarantine products as our number 1. Quality control is number 1. Number 2, we know that power, water is very important. So in our development, we are also taking in utility income from our heart, where we're distributing consistent and measurable power to every one of the units. Currently today, we're debt-free. We have $22 million in land and capital appraised. Our phase 1 cost is about $125 million over 4 buildings, gives us an 18% return on cost. We're offering right now 3 units at $10 million to come in our GPLP structure. $30 million allows us to continually be still debt-free and obtain. We already have financing for debt, phase 1 with a ROFO on phase 2, which is a complete $700 million development. Like on our rent, we have 8 to 10% return on our rent gross revenues. On our utility side, because we're a utility provider on this development, it also provides us a 10 to 12% return. Our fund lasts 7 years, The idea is to sell the real estate at a defined cap rate in year 5 and maintain the relationships. Because this is a federally regulated facility, there are multiple revenue sources that will be unlocked within our development that will also be participating in the fund. And what we have here, we're basically bringing the next frontier. We've seen a major problem in infrastructure around the world and the challenges. And as one of the oldest general contractors in Western Canada and being part of thousands of various developments, we look forward to building a landscape of regulated 10,000 properties.
Thank you, Sonny. You did get almost absolutely on the 3-minute diet. We're so grateful for you. We love Sonny. We had the pleasure of meeting him in person in Vegas and had a fantastic evening that night, learning all about his business and future plans. And we really encourage you to reach out to Sonny in his booth.
Next up is Nova Green.
So my name is Chen Porat, and I'm presenting Nova Green. We're dealing with cannabis disinfection. I'm not sure how much you're aware of this, but cannabis contamination is a major, major issue. It's an issue for consumers. It's an issue for growers. Consumers are in health risk, and growers lose a lot of money because of contamination. And we're there to solve this problem. For consumers, we want to ensure that what they get is healthy, it's safe, and it's pathogen-free. And obviously, for growers, we want to ensure that they don't dispose of a lot of crop and that they meet the regulatory requirements, which are continuously getting more and more difficult and challenging. How do we do it? We have an on-site cold plasma device for disinfection. This is on-site, no need to ship out the products to Gamma or E-beam. It's all done on-site. It's meant for medium to large growers. It's effective, there are no side effects, and there's no damage to the flower properties. The growers are charged per use. They pay something in the range of 4 to 6 cents per gram of disinfected cannabis. The company is managed by a very experienced team, and we all have a background in medical device, in development and commercialization of medical devices. And some of our achievements to date, we've done a very large number of pilot tests in Israel, showing the effectiveness of the disinfection and the fact that we're not harming the flower buds. We have a commercial approval from the Israeli Ministry of Health to send these products out to market. We have an R&D grant from the Israeli Innovation Authority. We've signed pilot agreements with most of the medical cannabis growers in Israel and some of the leading in Canada, all names that you're familiar with. And we have a very nice commercial agreement, one of the leading growers in the US. Here are some pictures from recent pilot tests we've done. And when we look at the forecast moving forward, we're planning to start sales in the next couple of months, and by 2025 reach $42 million in sales, and we are planning to break even by 2022. Funding. We've raised over $2 million to date from private investors. We're now doing a round B of $5 million at a pre-money valuation of $15 million. The idea is to finish the optimization of the machine, to get the approval, the regulatory approval in Canada, and to move to full production of machines. We want to establish a technical and sales support team throughout North America to finish the pilot phase and move it to sales in Israel, Canada, the US, and later on in Europe. And we need money, obviously, for working capital. So that's it from us. Thank you.
Thank you, Chen. You made it with 9 seconds to spare. That's fantastic. Next up, Jason.
Honey Gold Processing. Lawrence, are you there?
Hey, Lawrence, are you with us?
There we go. The mute's off. Hello. So today we're here to share the story of Remediation Sciences and Technology. We're currently looking for $1 million convertible note. And the purpose of that is to take out some early investor dollars, capital purchase of equipment, and working capital for liquidity. Who we are a remediation company. Remediation is technology used to remove THC, and that's an important step in the hemp industry. Product that's being grown in the field and being extracted into crude or distilled gets concentrated up, and you get THC, which is a very large regulatory issue across most of the states. So at this point, our business is focused on several technologies that removes the THC from the material. We've been doing so for the last 24, 36 months, which in this industry is a lifetime. So we have quite a great team around this problem solving. The money mechanics and how it works is that we will take a kilogram of oil, and folks will pay between $300 and $750 right now for remediation. And our margin at this time is between $75 and $150 per kilo. Why is this important that we kind of address this issue is because there is continuous price compression, and with the regulatory background and issues, folks need to solve this problem. With the technology and methodologies we're using, we believe that the next step here is to scale these technologies and effectively double the margin base, which will insulate us from some of the new, upcoming price shocks. We are currently generating capital. We are profitable, and we have 2 operating entities within this. And we're in the midst of signing a deal in Canada that will, in fact, allow us to hit our 2021 numbers this year, the most likely case scenario. So what we're looking for today is to have conversations around folks that are able to invest $1 million and what you get. So you would be in our holdco. You would be given an RFR on some of our new sites, right of first refusal. You would receive a return of your capital in the first 12 months, and then you would have a convertible option at the 24th month. And we're looking to put this in for 10% at the base equity level, and then the convertible option would be another 10%. So if you chose not to receive the second return of capital of $1 million, you would in fact get another 10% in equity. Use of funds are to exit an early investor, purchase new equipment, and reserve liquidity and working capital on deals. And that's the baseline.
Oh gosh, thanks, Lawrence. You made it too with
30
time
seconds
to
to spare.
spare. We really appreciate it.
Yeah.
Yeah, Lawrence has a heck of a value proposition here. And again, please feel free to go to his booth and join him after this so you can ask a lot more questions.
So you can also see their names in titles beside the stage in the chat there. If you need to look them up and you're having trouble getting a hold of them, you can find them right there.
And now we have next up is Can Innovations out of Israel. And Yana, are you ready?
Yana and Sarah, partners?
I am, yeah. So good afternoon, everyone. Thank you for this opportunity. And I want to thank Jason and Holly for putting this whole thing together. So my name's Yona Zimmerman. I am co-founder and COO of Can Innovations. I'm based in Israel. My business partner sits in Toronto. For the past 2 years, we've been bringing Israeli cannabis technologies to the global market. We've worked with over 40 startup companies and close to 30 licensed producers in Israel, Canada, and Europe. We realize we have more to give. So for the past 9 months, we've been working to establish the first accelerator for cannabis-related technologies in Europe. So just to clarify, Tech Accelerator gives entrepreneur education, resources, mentorship, thereby a chance of success, and that's in exchange for equity. So our accelerator is cannabis specific. The way it works is that in addition to the services of a good tech accelerator, our entrepreneurs also complete a POC or pilot in an EU GMP licensed facility or lab. So essentially this means that entrepreneurs have access to potential customers in order to ensure product market fit, plus the credibility of completing a pilot within the most respected regulatory framework in the world. Our deal flow is international, and we have strict acceptance criteria. So this isn't for brands, it's for IP-backed technologies. We're focused on technologies that solve a real problem along with a team that can implement. The program itself is run in 3-month cohorts of 8 companies each, and each cohort is dedicated to a specific area of the supply chain. For investors, we are currently in advanced stages of negotiations for a co-investment strategy with a cannabis-friendly European government. I'm not at liberty to say which negotiations, but basically it's a matching scheme. Investors also get equity in a diversified international portfolio of pre-vetted companies. And since each company will have completed a POC with a potential customer, their valuation will already have increased. You can select to invest in your favorite graduates with preferred terms for subsequent rounds, and you get access to our entire global ecosystem. In terms of the raise, we're seeking just under $2 million to cover operations for 18 months, and this will be offset by the co-investment scheme that I mentioned earlier. So that's it. In short, we combine thought leadership from around the world with infrastructure of the higher standards and an established ecosystem in order to help bring real science-based and validated technologies to the market.
Thank you. That was incredible. And you still have 15 seconds to spare as well.
Everyone stay healthy and stay safe.
Before we get the judges on, stay close. Before we get the judges on, we just want to, again, say to our audience, we have 4 segments of investment opportunities here. We have B2B, which you are viewing right now, followed by franchise opportunities, and then pre-revenue. And finally, our last segment will be B2C opportunities. So with that being said, we'd like our 3 judges to come on camera and our 5 pitchers, is that a word? Our 5 presenters. Everybody open your cameras. Matthew and Merrick and Hamish are going to do a rapid fire Q&A, and we're going to start with Hamish. Hamish has 3 minutes, like you had 3 minutes to pitch. He has 3 minutes to question you. Jason's going to bring the timer up here, and bear with us. Like I said, it's a lot better live, but we're hoping that this is smooth. So please don't speak unless you're asked a question directly. And judges, please say the name or the name of the company so they know specifically that they're being questioned. Are you ready?
And if I ask a question for which Matthew or Merrick have a similar question on their in their notes, then you guys please jump in and let me know. So I will start in order and talk about conception. Can you give me a sense for your business model other than being a supplier? Do you have any plans to open up, operate, or help other companies establish TC facilities in other jurisdictions?
So we have been approached by a few different groups around helping them launch. I think right now our model is hyper-focused on delivering clones of the market. We are intaking genetics from cultivators that are very specialty plants that want us to tissue culture them, clean them up, and then sell them back to them. But right now we're not looking at opening inside of other people's facilities.
Fair enough. Minimum number of clones that make sense for someone to set up a TC or to buy from you? How big should the operation be?
So we sell our packs in clean, sterile packs, and we typically sell them in packs of 48, depending on how far away they are from this facility or the customer. We don't typically do one off in Oregon. I think our smallest order is 1,000 order.
I'm in now.
This is going to be hard to do in 3 minutes with 5 people. Sonny, you're next with Agritech in Calgary. Good to see another Canadian up here. Thanks. How are your relationships with other LPs there, or are you establishing this campus as for new micro cultivators, or give me more sense?
It's a wide range of essential emerging markets. We're limiting the number of micro cultivators that came. We've had over probably 1,000 micro cultivators come to us. We're probably looking at maybe 10 to 20 in the first phase. We're really being selective of the type of tenants and companies that are coming into the facility.
Got it. That's not quite as much detail as I would like. I have a bunch of other questions, but my clock is ticking and I want to make sure I hit the other guys. Chen, that was a really good presentation. It was incredibly clean and focused. I thought it was really great. Is it remediation that your plasma tech resolves for pathogens, or sort of, and this will spin off into the honey gold folks, remediation in my mind is when you try and get rid of pathogens because you couldn't grow properly. What is your remediation designed to do, the plasma tech?
Well, we see that in general, plants, even if you grow them in a very sterile environment, you will still have all types of bacteria, you will have yeast and mold, and it's just something that you cannot completely eliminate. It doesn't matter how well you grow the product, you will still have that. And we see it everywhere. It varies between flowers, it varies between species, it varies between locations, but they all have some kind of problem. In Canada, for instance, you have to do irradiation or E-beam. You cannot do it otherwise. You can't ship it to market without that kind of treatment. Cold plasma is the standard of care in any hospital. If you go down to the basement, you will normally find a sterilization machine, and that's how things are done there. It's more of something in between physical to chemical type of treatment, but it really destroys the bacteria without touching the
terpenes and and,
yeah, and it keeps the
cannabinoids.
Cannabinoids, yes, untouched.
So quick to honey gold, is there an upper limit of THC for which you can be successful removing it?
Currently, we have 3 levels of remediation that we're doing. So we get to compliant, which is 0.3%. We then have a label non-detect, which is below 0.1%. And then we have what's called a non-detect or Euro non-detect below 0.4.
I know, Holly, you said 1 question per, but the question I have is if I give you a distillate with 17%, can you get rid of it? 17% THC.
Short answer is you can.
That would be daft, but you could.
Multiple passes.
Right.
Upper limit right now is around 7 or 8% on a single pass.
Yep. Okay. Thank you. And finally, to Yona, what happens to the IP generated through any of your networks in the accelerator?
So we get equity in the accelerator, but the IP belongs to the entrepreneur. And obviously they can make, joint ventures, or they can go for an M&A or whatever their exit strategy is. Sorry.
Excellent. Thanks, guys. I'm out.
Thanks, Hamish. That was fantastic. Okay, Matthew, Nordgren, 1 question each. Go for it.
Yeah, I think Hamish did a great job with the 1 question each. But Kevin, tell us a little bit more about the partnership with Phylos, great company in the space as well. You have another company there that you're partnering with. Like to know what that means for the future of business.
So Phylos has one of the most robust breeding programs. Our relationship with them is we have exclusive access to any cultivars they bring to the market. So as they identify strains that have pest and disease resilience or larger yield or shorter harvest times or any of the agronomic traits you see in other big ag environments, Conception has exclusive access to all of those cultivars.
Understood. That's a very interesting topic. Could ask a few more about that, but moving forward, Sonny, what keeps you up at night? I'm always curious with the Canadian market, US market. What keeps you up at night right now?
I represent one of the largest general contractors, and we have a lot of families and companies and organizations that rely on us to make some economic difference here in Alberta. So it's something that we're doing. We're very passionate about what we do. We were in the oil and gas industry. I've been a cannabis enthusiast myself, and seeing this regulated platform to get to the next step. So we're really looking forward of shaping and providing many jobs and opportunities in this Alberta landscape.
Thank you for that. Lawrence, same question. What keeps you up at night? I'm very curious about your line of business. Haven't made an investment in that particular vertical yet, but it's interesting to hear yourself, Ang Chen, talk a little bit today.
Right. So I think what's keeping me up at night right now is the technology is still not settled. Chromatography is the lead dog in the market for remediation. There are several types of technology using catalysts and other forms of remediation which are unsettled. And I think the reality on that is it's going to take 18 to 24 months for that to really work its way through the system at any scale that kind of makes sense for some of the large players. So we've been really developing that tech for 36 months and working on options around that. We think that some of the growers will solve the problem through the genetics. And we also know that you can start addressing this in the extraction phase. So right now it's kind of like a step further down the pipeline, but we believe that you'll be solving it earlier in the processing phase.
Yeah, that timeline will be helpful. Chen, tell me about the regulatory environment in your line of business. I'm curious to how you see that unfolding.
Okay, so, and I was corrected by my partner just a few seconds ago. In Canada, for instance, you cannot ship anything unless it goes through Gamma. In Israel, you can choose between Gamma and E-beam. In the US at the moment, it's not clear. There's no very severe regulation at this point. But I think everyone understands you cannot ship this type of product to market if it ends up in a medical use and you have someone that has just finished cancer treatment and is going to use it and it didn't go through some kind of a sterilization or disinfection process. So it's clear to everyone that this is going to be built in, inherited in any kind of packaging, let's say end of line type of service. The logic is to do it there and not to ship it out. Shipping out cannabis is expensive. You need to safeguard it. It's a major logistic issue. So here we do it on site for the grower. The grower can operate it itself. I think it's straightforward, makes a lot of sense. And all the growers that we talk with, and we talk to most of the growers in Israel and a lot in Canada, are very excited about the technology.
Thank you. Yona, we've looked at a number of accelerator incubator type opportunities. I think they're fascinating. A lot of different models out there with regards to that. Ease is doing some, Canopy Boulder, a handful of other great companies, different type of structures. Tell us about why the way you're working through this is the right way to do it.
Okay, well, first of all, what we're doing is we're doing a knowledge transfer from Israel. I think worldwide, globally, it's recognized that in terms of development of science and science-based technologies and all kinds of tests and research, Israel is very advanced. So we're building our ecosystem includes both academic institutions in Israel as well as in Canada, as well as mentors and partners across the entire ecosystem who have signed on to support the entrepreneurs. So once they complete the curriculum, they're going to be flying over to this European country, which cannot be named, where they will be completing their pilot in an EU GMP licensed facility. So basically when they start the cohort, they're partnered with a licensed producer in Europe who accompanies them the whole way so that they make sure that as they're developing their pilot and all the rest of it, it's a total seamless integration into the licensed producer's facility. And then they fly over, they actually conduct the pilot, and then they have both, proof that it's a good customer product fit. They've met everyone across the ecosystem, from licensed producers to distributors to producers to anything else that they need. Yeah, so then they get, like I said, the thought leadership from Israel, the strictest EU GMP licensed facilities, and that we believe will boost them forward.
Thank you. That's a very important thing for the industry. We've got to continue to resource and encourage these entrepreneurs. Thank you for your work.
Sure. So can I just add one more thing? I'm sorry. Part of the business model is that the entrepreneurs do get funding. So they get funding, workspace, access to the licensed producers, and the curriculum. So
thank you.
Thank you all. Thank you, Matthew. So let's have Merrick jump in. Matthew, if you could mute and take your camera off. Merrick, are you ready?
Yeah, sure. I'll try and make this quick because I know we're a little bit over time. So I'll start with Kevin. Just in terms of the sales cycle, can you just talk a bit about that and how that changes whether you're targeting an enterprise versus a smaller cultivator?
Yeah, so I think, look, just philosophically, one of the things that's very attractive for this model for us is it is a reoccurring revenue model. So as cultivators buy clones from us, we have stages where we set up and we know when the rims are coming down, so we have this constant flow. Our typical customer is medium to large growers in Oregon and California, and hopefully soon Massachusetts. Although we are supporting some of the smaller boutique groups that are hyper focused on specialty cultivars.
Got it. Thanks. That's helpful. And then for Sunny, there's a question on how involved are you post construction, and then also just kind of follow up on that. How do you think about yields on and how does that change on the type of tenant you're leasing to?
Absolutely. So we are actually involved throughout the process because this is a federally regulated facility. We want to be heavily involved in the management of the actual park, because we're going to be delivering these facilities turnkey. There's people that have to adhere to the Canadian laws, the federal laws, the GMP licensing if they're in the cannabis space. So we want to make sure that they're adhering to that because it is a community space. So that is all involved in their operation costs. So we are involved post.
Got it. Thanks. And then for Chen, you mentioned a couple different target markets that you were going after. Are there some where you're more focused than others, and where you're further along?
Yeah, well, obviously we are based in Israel, so as far as that, we are right before, and we have the Ministry of Health approval already to sell commercially. So I think we've done a very large number of tests already in Israel. We're going to start selling very soon. Once we validate with every manufacturer that they're happy with the results, we're going to start placing the machines there and start selling. But obviously the next big place is Canada. Like we said, Canada requires gamma. Gamma is a real problem for the users. It changed the odor of the product, the feel of the product, and a lot of users don't want to use it after gamma. So Canada is a major market for us. The US regulation is somewhat behind, but it will get there eventually. So it's it's certainly a priority, but it will come next. And Europe also is following. So we will see definitely a buildup in the US and in Europe, but Canada is right after Israel in terms of our priorities.
Got it. And then for Lawrence, just a question around the IP. And do you have a patent? And just how are you building out the IP portfolio?
Right. So we do have 2 patents that we're connected to, and we have several other that we're about to file. We're looking at the patents around chromatography is limiting still. We're not sure how far that will persist. And some of the new techs that are coming online, I think are just going to surpass the patent space. So we're not overly focused on that. We're much more focused on the formulation and partnering with the companies that are selling and making the product to actually deliver them on their specs. So think of us more of an ingredient company and a sales channel than just a pure tech or innovation play around remediation.
Got it. And then just my final question for Yona. How involved, so you mentioned, I think 3 months is kind of how they go through the time it takes to go through the program. How involved do you plan, or are you post going through your accelerator and helping these companies?
How involved are we?
Yeah.
Meaning our team? Yeah. So basically, Sarah, my partner, and I run the operations and manage the accelerator. So that means we're responsible for getting the technologies, and this is an international. We're looking at international deal flow, closing agreements with academic institutions, finding other platforms. We're responsible for identifying the mentors, bringing them on board, working with them to develop the curriculum based on what each cohort is going to need, because each cohort is also dedicated to a different area of the supply chain. So we are managing the accelerator, but we are, and I mean, we can support the entrepreneurs, but we really rely on our partners and mentors who are top tier and are the most helpful in their field. And that also includes business executives.
Thank you. That was fantastic. We're going to launch a poll now. I think we want to see what the audience thinks about these five businesses, and we want to know which brand that you would be most likely to invest in. We're launching the poll now.
Panelists, we've actually opened up so panelists can also vote. If you would, please.
15 seconds. You've got 1 minute, so you've got 13 seconds left to vote. If you haven't voted. All right, we've got results. Jason, tell them who won.
Conception Nurseries, you came in staggeringly high. We've seen this before. A very, very impressive business model. Kevin, if you want to come on and say a few words, you had 53% of the votes.
Well, thank you very much. Thank you for setting this up, and thanks for having me. We're very excited and honored to be presenting here. I will be in the booth for the next several hours if anyone would like to chat offline. And thank you for the panelists and everyone who presented. This has been a very valuable exercise here. So thank you.
Thanks, Kevin. We'll also share Kevin's contact information by email. You can reach us at support@cannabis10x.com if you have any trouble getting a hold of him. One of the biggest differences when you're raising capital is you're giving up equity. When you're selling franchise territories, you're raising capital in a different way. You're getting a franchise fee up front. Let's say it's $100,000, and then you're getting the franchisee to pay for the build out and pay for the marketing and get the license in that state.
Denver Dispensary has just franchised their very profitable concept with multiple stores, and they are in the process of finishing up their operations as they map a successful franchise. And they're called, we're debuting it here, and they're called World Leaf. And you want to tell them a little bit about what World Leaf means? Do you know what that means?
Sure. Well, so Denver Dispensary is how their brand has been for the last 10 years, I believe, with a few operations in Denver. And they're rebranding to World Leaf.
At Bud's Place, it's a consumption lounge franchise. They are completely franchised. They are the first consumption lounge franchise in the world. So they have a great value proposition that you want to hear. Then we have Dadiri. Dadiri is fantastic brand. The branding for Dadiri, really caught our attention as we were looking at things. And Dadiri is franchising, so they are just at the very beginning stages. So they are actually looking for an investor to come in and help them to launch their successful brand into a franchise.
So my name is Ashley Schreiner. I'm the co-founder and owner of Dadiri. Dadiri is an Aboriginal word that means inner listening and a tuning in experience with nature. We're a family-owned and operated company. We've been in the cannabis space for about 10 years now. We launched the Dadiri brand in 2018 to provide top-of-the-line products for the Colorado cannabis consumer looking for a cleaner, tastier, and superior cannabis experience. We offer an array of products, including our Caviar Sunrocks. We have our premium line of solventless bubble hash. We've got our 1,000 milligram CBD elixirs and our much anticipated proprietary oil, which is being launched this month, which is really exciting. Not only do the products pack a punch, but so does our branding. Our logo, our color scheme, our packaging, our overall story of the brand, they're super strong and very unique. We literally can't keep up with demand for our merchandise. And because of the dreaded Dadiri brand, our shelf presence far exceeds that of our competitors. So we strive to be a lifestyle brand that brings cannabis, people, and nature together. So let's talk a little bit about the numbers here. We launched Dadiri in less than 60 days for only $150,000. That includes equipment, building modifications, marketing, raw materials. Within the first 18 months of business, we reached $1.3 million in sales. And mind you, that is in a very well-established and super competitive Colorado market. We project our sales this year to be $1.8 million. And that number is based off of our current sales growth, the launch of our new products, and the opening of our 4,000 square foot MIP, which is going to accommodate for that growth. So $1.8 million this year, have a huge facility. Our average profit margins for our products is about 37%. We can usually hit close to 90% with our infusion model, which uses customers' own flower. So for our franchise model, we're asking $100,000 buy-in and 8% royalties. We're also open to investment opportunities. And so why is Dadiri going to be one of the most successful franchises in cannabis? Three things: people, process, and product. Because we've been in the industry for what we like to call, since like the Wild West days of cannabis, we really have learned the ins and outs of the cannabis space through experience and by doing it. So from setting up the manufacturing facility to compliance, to sourcing, to processes and quality control, and then of course, branding and sales and social media, everything that goes into a successful business, we kind of know it. So we have a really established and amazing brand. We have a company that breeds success. We have laid the groundwork to make this a super franchisable concept. And we're taking Dadiri to the next levels with partnering with some of the most well-known franchising powerhouses around. We're ready to take what we've done in Colorado and mimic that throughout the United States and potentially the world. So the time is now. We'd love to have the right people by our side for this journey. Please visit our booth and reach out for any questions you may have. And I look forward to speaking with you and showing you how to live Dadiriously.
Ashley, that was fantastic. Thank you so much. And I'm glad we got to hear the whole pitch. Thank you. All right, this is exciting. Okay, next up, let's go to Ron Silverstein from Bud's Place. And participants and panelists, please keep your video and audio muted until you're brought in. And that way that the people on the Excel Events platform will only be seeing those who are pitching. We'll do the same and keep our video off as well. Okay, Mark Cohen and Ron Silverstein. Ron, you are muted, just to let you know, so unmute yourself. And Mark, you're ready to go.
How you doing? And thank you very much, Jason and Holly, for the platform. Bud's Place is a social cannabis consumption lounge concept. Bring your own cannabis, no dispensing, at least for the time being. A safe place, upscale atmosphere, VIP rooms and special events where our customers will have HQF, high quality fun. We will have some company-owned lounges, and we have a franchise company already in place to coordinate the rapid build of the brand and its value through franchising. Revenue streams will include entry fees, food and beverage, entertainment, and retail of accessories and other items. Our franchisees will have one of the highest ROIs of any franchise concept, if not the highest. We are the only cannabis-related concept that has been permitted to join the International Franchise Association. And as far as we know, we are by far certainly the only consumption lounge franchisor. Bud's Place solves the issue of where. Where can I smoke? Where can I vape? There are many dispensaries, yet the rules have always been that once you buy it, you must go home. We compare this industry to the bar industry. You can drink in your house, yet there are more than 60,000 bars in the United States, all shapes, all sizes. You can smoke in your house, yet there are probably not even a handful of consumption lounges, none of which have our revenue model. Our model, bring your own, accomplishes a few things. The banking issues will not affect us since we do not dispense. There won't be issues having payroll or deducting the operating expenses. And should the government start enforcing cannabis laws, we're not out of business. The next day, we become a high-end cigar lounge. Once cannabis does become federally legal, we will probably start dispensing or partner with a dispensary for them to have a retail space in our facility. Ron?
For my part now, I want to start with a disclaimer. This presentation is not the offer of a franchise. The numbers we're going to be talking about in a minute are not the numbers for a franchise. Franchises can only be offered by our franchise disclosure document. So there's our disclaimer related to that. We are offering today a 50% interest for $5 million in 5 company-owned lounges. And your $5 million would be paid back through preferential distributions. We need to get 1 lounge opened, and then we believe the franchising side will explode. We do also have an investment available in the franchising company. We can talk about that later in our booth. We project that 1 lounge will have annual revenues of approximately $3.3 million and EBITDA of $700,000. Cost for 1 lounge is approximately $1.25 million, but with 5 company-owned lounges, we can do those for a total of $5 million. We project that by 2025, with 5 lounges open, the EBITDA will be almost $7 million. At a multiple of 20, that equates to a market value of $140 million just on the company-owned lounges.
Thank you, Ron and Mark. This is fantastic value proposition. We hope that you visit them in their booth. And just really quickly, if you get on the main page and you're in the lobby, there are some tabs below. And one of the tabs says, of all things, exhibitors. So click on that tab and all of our exhibitors will be there. And you'll be able to go and do the networking one-on-one with Mark and Ron and see everything they have in depth. Okay, hang on for the judging, Mark and Ron. And who do we have next, Jason?
It's your brighter side.
Hey guys, how you doing? This is Lindsay Shaw, the president of Brighter Side Cannabis. I'm sharing my screen, so hopefully you can see it. In 1996, our team first started growing cannabis in Honeydew, California. Over time, different Brighter Side members started pioneer grows in their own states. As the industry came out of the shadows, we met each other, consulted with each other, and formed lasting bonds through lessons learned and taught. In 2009, many of us entered cannabis with our own dreams and goals. As we grew and society grew, our vision expanded. The collective we have formed today has become Brighter Side, a team of experts that has grown tons of marijuana, a business that has recorded decades of data. Brighter Side is a complete package of knowledge on design, growing, extraction, and sales. We've been crafting and refining our extraction methods, training dozens of students, and won the Cannabis Cup for solventless extractions in 2019. Our team currently operates a 450-pound per month model facility of clean, fully expressed, high-grade flower. Our retail and delivery team started in 2009 and currently operates in 3 states. Since 2011, Brighter Side has designed over 1 million square feet of cultivation space, consulted over 300 grows, and holds exclusive manufacturing rights for all mobile and vertical farming equipment with a top US manufacturer. As a team, we've taken companies from design concepts to over 20 million in annual revenue. And now it's your turn to enter this industry with confidence. What we offer today is a fully integrated seed to sale franchise. We oversee, train, support, and help drive your business. You grow, you process, you profit. We take the guesswork out of building your business. You will be using our building designs, our cultivation equipment, standard operating procedures, genetics, and our tracking technology. This lean, mean system will outlast, outperform, and consistently drive sales. The Brighter Side franchise is poised to be a sought-after brand by connoisseur consumers, as well as new-to-market consumers that are looking for a healthy, consistent product everyone can enjoy and trust. Brighter Side has designed, implemented, and refined everything from our patented vertical system to our consumer-friendly retail and delivery software. Our support is the key. Our communication and oversight is your insurance. When joining the Brighter Side franchise, you will receive continuous support, delivery of our prized genetics, technology updates on all extraction and cultivation equipment. Our R&D facility will relentlessly be testing new equipment, lighting, and nutrient formulas so that your business has the most up-to-date technology. No place else will you be given an opportunity with such an advanced team that ranges the full dynamics of cannabis culture and cannabis industry. Today, we are offering this franchise opportunity to the public. This is the golden opportunity you've been waiting for, and in cannabis, success begins with Brighter Side.
All right, Ashley, thank you so much. That was perfect. You timed right at 2 minutes, or I'm sorry, I said Ashley, Lindsay. We timed 2 minutes and 59 seconds. That was absolutely incredible. Who do we have next, Jason?
I think that Eric might be back in here with technical difficulties there. And we have, but before then, actually, let's have Field State. Are you guys on Field State?
I'm here.
All right, thank you so much, David, with introducing Field State, and go ahead.
Hello, I'm David Melnick. I'm one of the co-founders of Field State. So Field State is a dispensary brand that helps better connect individuals to themselves, each other, and their communities through the use of cannabis. So our focus is purely on dispensary operations, and what we want to do is work with independent dispensary owners and operators, provide them with the necessary branding, strategic, and operational support to put them on a level playing field with some of the bigger players by creating some economies of scale for them and really focusing our time and attention on activities that are crucial for a very challenging industry and is often overlooked by the independent dispensary owner and operator. The core team is myself and my business partner, Corey. We actually started our first company together when we were students in college, and we've kind of teamed up again today to work on Field State. In addition to us, we have a lot of other people helping us out. It's something that we really pride ourselves on is the quality of the team and the people we're working with. We try to find individuals much smarter than us to constantly challenge us and make sure we're heading in the right direction and thinking things critically and trying to be a bit different and more strategic about how we go about our business. Like I said, the objective is to help entrepreneurs and really provide them with a place in the cannabis industry We want to promote localized ownership and how these dispensaries really connect with the communities in which they operate, and develop brand loyalty. There's a lot of switching between brands in the cannabis industry. So how do you create that customer retention? And then also invest in meaningful value add services for the people we work with, specifically with online ordering and delivery. My partner, Corey, previously owned a online ordering and delivery platform. So this is a really, kind of a special place in his heart for this type of service. Where we stand today, we have a verbal commitment from one group in Missouri to work with us. We have additional relationships in process in Missouri. And then we have some partner applications pending in Illinois. We have our own applications under review in Missouri. And then we're constantly out there networking with different brokers and trying to get our name out there the best we can. We know there is a demand for this service. We have infrastructure ready to go. So just bringing it to market. Our revenue structure is pretty straightforward. The one caveat is in some states, we may have to go to a fixed monthly fee. That's just dependent on the regulations of the cannabis laws themselves. You can see some of our challenges and our benefits. And then our ask is $500,000. We're a C corporation, and we're looking to kind of establish some licensee relationships, further develop our systems and manuals, and then implement some strategic activities. So thank you very much.
Oh, thank you so much. That was fantastic. We have
Eric Roth came in. World Leaf by Denver Dispensary. Eric Roth, are you up?
Thanks for your time. My name is Eric Roth. I'm the co-founder and owner of Denver Dispensary. Denver Dispensary is a successful cannabis brand with 9 years of experience in operating in the Colorado market as a retail store and cultivation facility. We're excited to offer our model of operations as a franchisable business. Our experience in the complex industry positions us to be a duplicatable model to be franchised to interested entrepreneurs to help them achieve their dreams of being in the cannabis industry. What we've done is we've formed a partnership with Cannabis10x, Jason and Holly, one of the best franchising teams in the country, to offer World Leaf by Denver Dispensary. World Leaf by Denver Dispensary, we are rebranding to the World Leaf name from Denver Dispensary. We are going to franchise our brand, which drives the educational model for retail success and customer retention with meticulously organized operations. Our proven track record of successfully operating in a highly regulated and scrutinized business, combined with Cannabis10x's franchise experience, will prove to be a successful growth model for the business. Our projections are to bring on 12 franchisees per year over the next 5 years, with projected revenues of $2 million per franchisee location. And our ask is $1.5 million, a $1.5 million partnership in which an investor will receive 0.5% top line royalties from all franchise revenue for every $500,000 invested. The proceeds are going to be used to develop and launch a franchising model of our successful retail operations. And we hope you have some questions. We'll see you in the virtual booth. Thank you guys for your time.
Eric, thank you so much. That was an excellent presentation. I think in Eric's booth, he's got more in his new branding. He's got actual images of the store and what it looks like now. We are so happy to have all of you. This has been a great group of 5 very, very good, strong franchises. With that being said, right before we go to the judges, we'd like to just really quickly jump in, and Jason wants to, just for all of you out there who's a little curious, tell very briefly about the team of we used franchise.
Sure. So at Cannabis10x, when we work with a client that wants to franchise, we've assembled a team, a world-class team. From having seen a lot of concepts, we go through. We spend a lot of time going through FDD's franchise disclosure documents and validating concepts by talking with franchisees, and did consulting for hundreds of different brands, from household name brands to emerging brands. and saw some of the in this space, in CBD and cannabis, saw some of the fastest growing concepts, selling faster than we've seen since back when McDonald's first started. So that's how fast these sell. We have portfolio buyers for territory sales, and as well as individual franchise buyers that are consistently in our brokerage. So what we bring to the table, and Holly, if you want to introduce some of the partners here, we have franchised over 2,000 concepts, including Sparrows and Five Guys.
Yeah, Harold Kestenbaum out of New York. He is also partnered with Spadia. He's a very good friend, and legally, I don't think there's anyone better in the space. And yeah, again, he started Five Guys, Sparrows, and 2,000 domestic concepts, dozens of international concepts, and he's working with us exclusively right now. And then we have our branding team, comes out of Cincinnati, Ohio. Procter & Gamble award-winning oil delay strategist, Lisa Bowen and her team, Kearney, and they do an amazing job working with the branding, the preparing for franchising, the deliverables, the store build out, all of it, staying within the model and the cost, and all of that goes over to Kit Vincent, who you're going to hear from. Kit has a 10-minute segment that he's going to be doing here. We rolled right over his talk here today, so we're going to bring him up.
Operations. He'll standardize operations and procedures for each territory.
All right, so let's open up our judges. We've got Matthew, Hamish, Merrick, and all 5 presenters. You can open your mic and your screen, please. And we'll stick with the 1 question per. I think that worked out really well. Just, kind of a rapid fire still. And we're really excited for this. And I think, Matthew, we're going to let you start just as you did before. Go ahead.
Well, I think we had Hamish start last time. He did a wonderful job going through the companies. Hamish, if you don't mind, friend, I'd like to follow your lead here.
You're right. We did, didn't we? Excuse me. Hamish, go ahead.
Fair enough. So I'm going to go in order of how they are on the presentation table of contents rather than how they were presented, because that's how I took my notes. So the question I have for World Leaf by Denver is: do all your stores require, or must they have, or can it be? Do they must have cultivation and retail, or can it be one or the other? I ask in the context of being a Canadian and specializing or focusing on my 10 or 11 jurisdictions up here.
Yeah, absolutely. Great question. I'm glad you asked this one. So our franchisees will be retail store locations. That's what we're running with for this one. And we do have experience and the opportunity and option to move in other directions and offer the cultivation as well. There's also going to be options if we can move into states to actually be this cultivation supplier for the franchisees. So currently we're going to be having franchisee retail locations, and then hoping to move into other opportunities as well.
Excellent. That's important to know. In Canada, the federal government allows farm gate stores where there's a cultivation, but they have yet to actually launch. So keep that in mind for your next steps in Canada as a franchisee. Bud's Place. As people come into your lounges, is there a door fee, or how does the revenue model work? $3.5 million per franchise is a lot of money in revenue. For somebody that's not selling a product but a service, and that is the space in which to be comfortable and do a bong. Do you provide the bongs? What is or is this just like popcorn at the movies where they make no money on the film?
Here's what our model's like. So there is an entry fee or a membership fee, and pre-COVID-19, we're making some changes to the model right now. But so pre-COVID-19, our entry fee daily drop-in is $10. There's a $150 a month membership somebody could sign up for, or $1,200 a year membership. With those memberships, you get certain perks. There would be discounts on food and beverage, for example. There would be access to VIP rooms. It's far more than just a place to walk in the door and use your cannabis products. Related to our retail area, so we do retail and rent, bongs, pipes, other accessories, CBD products, all of that stuff. So that's part of the revenue stream, our sales and rentals of accessories. You know, we've got a small little retail area in the store design. These are 4,000 to 6,000 square feet. So if you look at a 6,000 square foot location with a lot of different things going on and hundreds of customers a day, which we've got data to support our customer model based on what other restaurants and bars and cigar lounges do on a daily basis, all that's factored in. And between the food and beverage and the partner we have on food and beverage that has restaurants that are open, doing millions of dollars of years in sales with a smaller space than what we're going to have, you know, so we've got the membership fee, entry fee as part of the revenue stream. We've got the food and beverage as part of the revenue stream. We've got special events as part of the revenue stream, and we've got the retail area as part of the revenue stream. So all that builds up to the 3.3 million annual projection from a unit.
Would you said 5,000 to 6,000 square feet per unit? I know it's only one question per organization.
4,000 to 6,000. Yep, 4,000 to 6,000.
Okay, so it's almost certainly going to be more suburban rather than downtown, because that's a hell of a lot of space in an expensive core.
Well, it depends on where you are downtown. Frankly, you could be in downtown Detroit with a 6,000 square foot space once they're allowing consumption lounges, and you're not going to be paying a lot in rent.
That's true.
And with COVID-19, rental rates are going down, as is real estate accessibility is getting a lot easier for a consumption lounge type of place.
Leases should be available. Ashley, at Didiri, you mentioned an expression that caught me off guard, and that was a proprietary oil. And so I'm curious about that. It's not a business decision. And then how do you avoid what's happened with a couple of the other franchise or at least branded licensed ideas that have been out there that are kind of softening in the marketplace?
Yeah, first of all, I want to apologize for my pitch being interrupted a couple times. Hopefully everyone kind of got the gist of what I was saying. If not, please go to my booth.
Great,
I know that was
Ashley.
a little weird.
It was great.
But yeah, proprietary oil, you know, I don't want to say too much, but it is an activated full spectrum oil that there's a huge need for in the marketplace, especially here in Colorado. We've had a lot of requests for it. We've kind of hit some bumps with the fire departments and getting things up and going, but that's finally launching at the end of the month. And so we were able to launch this business with products that actually have a lot of competition, and we still did really well. This product is going to be a whole game changer for us now. And to speak to your other point, I guess I'm not too sure exactly what companies you're talking about that have kind of softened people who have tried this model from a manufacturing standpoint, and it hasn't worked out well. Is that what you're inferring?
Yeah, there are a couple of edibles companies that I'm aware of that are suffering extra high growth issues.
Interesting.
Where they move.
Yeah, edibles is a hard market. Edibles is a hard market, but I think that we're very specific about the products that we've chosen. For example, like our Caviar Sun Rocks, tourists love them. Everyone comes to Colorado. It's a huge buzzword. It's a huge hype. And I think if we could bring products like that to other markets, it would go well.
Thanks, Ashley. Holly, this is going to end up being a problem because I talk more than everybody else. And so my 3 minutes, I'm chewing into everybody else's. So I really apologize.
It's great, Hamish.
Frank, do you have a team that looks at the differences between jurisdictions for your model? And I say that because you said that you're able to move your genetics. One of the things you're going to be selling will be your genetics, and I'm curious how you're going to get it across state lines. And in my context, how am I going to get it into my Canadian market?
Well, more importantly than getting genetics to you is working with genetics in the markets that we're able to.
Okay.
And actually studying those genetics and working through those genetics and their growing techniques and in the way that we do it to result in what we want to result, whether it's top-end flower or using them for a specific extraction method. So therefore, once we use those genetics in one place, we'll be able to source those genetics in the legal manner in where we are opening up a franchise and work with their team to obtain those genetics and then start those genetics there. So a lot of these things exist in cross lines and have existed throughout the industry. So using a genetic in one place and then being able to source for that genetic legally where you are. And then in the future, hopefully with federal and regulations changing, being able to move those genetics from place to place.
Thanks, Frank. Over to you, Merrick and Matthew. Thank you for your patience.
Oh, wow. Okay, Hamish, you do such a wonderful job. I just could listen to you ask questions, I think, for a long time, personally. Guys, I want to ask you all the same question because there's quite a bit to unpack here. And I'd like to go back down the line. And if you had one more thing that you wanted us to take away from your business, because there's a lot more I can tell from each of you, what would that one thing be that you haven't been able to say or you think is really important for us to know about your business that hasn't been said yet? Eric, we'll start with you.
There we go. All right. I think one of the biggest things, I guess, to take away that was not mentioned is just that this industry and all the elements that are involved with it, and specifically in my case, we're launching with franchising dispensaries. There's just a whole plethora of processes and procedures and details and operations that are new to we all learned in the last 10 years or shorter in creating the operations and how we do these things. So a franchisable model for these businesses is, I think there's a great need for it. It's not something that is out there in great supply. There's not a lot of franchise businesses franchising in the space. So I think we're definitely on the forefront of helping this really continue to take off throughout the United States and in the world, frankly. So,
well, it's going to be interesting. The entire consumer side of the industry is developing right now, really, and can't wait to see what all the great entrepreneurs develop. Budsbox, tell us what we haven't heard yet. A lot of things going on over there.
Okay, so, and I'm gonna go back to something that you have heard from us before, from Mark's part. We've got probably the highest return on investment in the franchising industry for a franchisee, where somebody can pay all in approximately $1.2 million and net more than $500,000 a year on one franchise unit. So we believe that the ROI with our brand, and we are a pioneer, so it's not like there's a bunch of dispensaries. There aren't any franchise consumption lounges out there in an industry that's going to be huge. But we've got that high ROI, and we also mitigate the risk, because there is, on all these concepts, a risk that cannabis becomes or stays illegal federally, and they start enforcing the rules, and we're not out of business if that happens. We just change our model a little. So we do mitigate the risk that an investor would have by doing anything in the cannabis space.
I like the concept. You spent a lot of time telling us about the model before COVID. So I'd like to hear a little bit about what it'll be after, because a lot of those things are going to be different. So we'll look forward to visiting you in your booth. Ashley, tell us what we missed. What's most important that you'd like the judges to hear?
Yeah, just to piggyback a little bit off of what Eric said, I think it's really important to get with people who have been in this industry for a really long time, because there's so many little details, ins and outs, so many important things that you learn after being in this industry for 10 years. And I think a really cool thing about the franchise model in the cannabis space is that we've paved that way for you. We figured out all the ins and outs to make it really easy for you. And also maybe a lot cheaper as well. Somebody can get into this cannabis industry for a lot less than what it took me to get started, say 5 years ago, and build it to what I am now. So I think it's a really great model. And I think if you get with the right company, it could be huge.
Well, I appreciate that. We talk a lot about collaboration. It's the spirit of the plant anyways. Botanical wellness is sort of a collaborative entourage effect theory anyways. And I'm really encouraged to hear you talk about that. I think all the battle scars that you guys have from building these companies over the years, we recognize as investors. We've been there with you. So to be able to increase that, that's the spirit of, I think, what we're all trying to accomplish. Thank you, Ashley. David, what would you say is the one thing you have to tell us that we missed?
So I'm going to, something I talked about just briefly, but it starts and ends with the team for us. Who are the people that you surround yourself with that take the business plan and help you implement it with your partners that you're working with? Like I said, these are very complex businesses. So, it's not just, past experience, my partner and I opened a bakery, a little simpler, selling cookies. This is much more complex. So how do you, take everything that needs to be done from the operations, the strategy, the branding, package it all together? Who's helping you get your partners to market? That's the biggest thing. Getting to market and, doing it the right way with the right team is super important.
So as they say in Canada, right, Hamish, skate where the puck is going. Is that right? Thought the Canadians may enjoy that one, but you learn that, right. Like David said, I appreciate that, David. You really do have to see and build for this future. And I think this is a perfect time to be doing that. Frank, what would you guys say that you want to leave us with?
So really reiterating the team, but not just that. With Brighter Side, we really have the support. Our communication network, our whole corporate model is based around supporting you, from our training facility and where you're going to go take classes in Michigan, set up for you to learn everything about our growing method, all the way through to how we track you and everything we're going to do to stay on top of you and in your business so that you can be all you can be with our support network. It really is all about our teamwork and our experience and what we bring to the table to streamline you, right to the top of where you're going to be opening in the future and where we can spread Brighter Side all over the place. So that's what we bring to the table. I can't reiterate.
Thank you. Like your passion, man. Merrick, hit him with some harder questions.
I'll try. So the first question for Eric, just in terms of being able to, I think you mentioned targeting 12 dispensaries. Are those all in Colorado? And if not, kind of what do you view as, the barrier to, expanding this and scaling this franchise model across state lines?
Yeah, so that's a great question, especially the second part. I like that a lot. So we're talking 12 franchise locations. Since we are based out of Colorado, we'll probably concentrate on starting there. Hopefully the first ones will start here, but it's something that we want to do nationwide at a rate of 12, bringing on 12 per year with a 5-year projection of having 60 stores. I think the biggest barriers in this and the biggest things that we're kind of looking at and trying to address and kind of foresee the future on is going into all these different markets and the different regulations involved in those different markets. So it's something in the last 10 years, it's changed a lot here just in Colorado with what we're doing. So it'll be real interesting, and we'll really have to make sure, again, like any good franchisor would, that we have, meticulously organized operations that are also customizable, and we will have to have, make sure that our expertise in those other territories and areas are very good, so that we can dial that in and make sure we have a good franchisable model no matter where we're at. So.
Yeah, I think it'll be interesting to see how these national retail brands are kind of built over the next few years before legalization fully occurs.
Extremely interesting.
So just on Bud's Place, can you just go into, because I think we spend a lot of time, on the regulatory issues on, the dispensary side, but can you just go into, the regulatory hurdles on consumption lounges generally, and where the key struggles are there?
Sure. So with the consumption lounges right now, states are starting to approve consumption lounges. So we've got Michigan, we've got Illinois, we've got California, we've got Colorado, we've got various states where consumption lounges are now legal. They all have their own rules. So we have on our management team a guy who's a very well-known national cannabis activist who used to work for the CDC and other health organizations. He's our guy who follows the rules and tracks the rules in different places. For example, most places right now that are approving consumption lounges have a very strict air quality standard. So built into our cost, when we're talking $1.25 million or $1 million for a company-owned lounge to get open, that's $350,000 for the HVAC system is included in that, because we've got a very high-end air quality system that pumps the air out of the building and replaces it every 15 minutes. That's just an example of one of the, some states allow you to dispense, some states don't. We've taken the position on our franchise company that we're not going to be dispensing until it's federally legal. And that way we don't have any of the tax issues, any of the banking issues for our franchisees. But the rules are different everywhere. We're tracking them. We're going to follow the rules. We're going to have franchisees that are very laser focused on following all the rules, because we know that we're going to be under a microscope once we get these things open, and we've got to do it right.
Got it. Thanks. That's helpful. My next question for Ashley, as you think about kind of a post-COVID world potentially, or is a recessionary environment, how do you think about, positioning of I think to use your words, like a premium, higher price point brand in the space?
Absolutely. We've actually already pivoted to kind of to work with that. So we have our caviar joints and we have our solventless bubble hash joints. Sometimes they can be $22 retail. Well, we've gone ahead and made mini sizes of those, right? So single sesh joints, since we're not sharing anymore, and it's knocked that price about in half. So there's lots of things like that we can do, making smaller size of things while people can still get a premium cannabis experience for a cheaper price. We've already implemented those and it's taking off really well.
Got it. And for Brighter Side, curious, what's your typical process, to go out and find people to, or companies to partner with?
Right now, so we've been consulting in the consulting space since 2011, and we transitioned over into the cannabis company just this year. So we've been going out and working with companies for years that have been looking for a lot of the things we've brought to the market with our franchise. So in a space like Michigan, in a space like Colorado, it's typically new people that are coming into the marketplace. In Michigan right now, our launching project right now that we're working on in Grand Rapids today, they came to us through an expo that we met them at, very simple. Before we even started launching or advertising what we were doing with this cannabis company, it was the first company that we brought it to, and they immediately jumped on board with us. We found another facility in Michigan that we can use as our classroom, that is our company's facility. So as of now, we're going to be launching into the new areas. We have a property acquisition team that goes ahead of us, looking into new marketplaces, looking into new regulations, working with local municipalities, scouting out locations in vacant buildings that are, target places that cannabis companies would be lucrative for the local community, for local jobs. And then we start advertising and working with that, within that space to find people that would be interested in using that space to come in under our model. So typically it's a new to the cannabis industry person that we're looking for, that's looking for a very good investment opportunity with a sound team that's going to take their business to revenue.
Got it. And then my final question for Field State. I think you mentioned you or your partner, had prior experience in the franchising space. How did you, or why did you choose, the cannabis space as an attractive place for the franchise model, versus any of the other areas where it's a prevalent model?
Yeah, because we basically saw an opportunity. Very few companies were venturing down this path. It's not one that is easily gone down. You have to make sure that your systems, procedures, everything is buttoned up pretty tightly when you're going and trying to sell this to someone that's going to be an operator. So it's a new challenge. That's what we like. It's a very tough industry to operate in, but it's something that we like going after, is the tougher things and seeing where we can add value and looking for opportunities where the existing market is kind of lacking and trying to take some advantage of those inefficiencies.
Got it. Thank you.
All right, thank you guys so much.
Thanks, Merrick. Thanks, everyone. So Kit Vincent was going to present, and schedule-wise, we've pushed back. So we're going to do a poll here, make it live, so everyone can vote on their favorite franchise model. It's which brand would you be most likely to invest in? Well, coming in at number one, tied place, is Bud's Place Consumption Lounge and Field State. Two of you are actually the chosen ones.
It was right there too.
It's neck and neck with all five.
you were all between one vote apart. So from first place to last place is literally 3 votes. And we encourage our audience and our viewer members to go to the booths. We have Robert Kerr, who is going to be our next speaker. And Jason, do you want to introduce Robert with his bio a little bit?
Sure. We met Robert not too long ago doing debt financing in the cannabis space. And we were going into pre-revenue investment opportunities, which he's going to help us kind of round up and let you know what's important when looking at pre-revenue concepts. Robert, are you there?
Guys, thank you. I'm very excited to be part of what's going on today, and share my screen. And I'm looking forward to giving our speech here today. So again, just a little introduction of myself. I'm going to be giving Understanding Capital or Lending in the Cannabis Space, presented by Robert Kerr, and I'm currently the managing partner of Echo Capital. At this time, Echo is an integrated financial services and lending company providing financing and consulting to the cannabis industry. I am our current founder and chief relationship officer, is one of the things that I like to call myself. And we have a portfolio focusing on loans for the cannabis and hemp companies at this time. We've been in business for about 4 years now in the cannabis and hemp space. And as you guys know, in the cannabis and hemp space, in every year is like, in my opinion, are like dog years. So as we continue to go through this, the learning curve continues to get better. Today, I'm going to focus on different loan types. We do have one of the divisions that we do help with consulting with folks so far is the debt piece of it. At this time, I find that the most popular products that seem to be needed in this space seem to be around real estate requests, equipment leases, term loans, lines of credit, convertible notes. A couple of products that I've actually noticed that have been more popular even recently that I don't have in my presentation today is purchase order financing, in efforts that the cannabis space continues to work through its supply chain partners to make sure that the access to capital is all the way down. So one of the reasons I'm focusing on these particular products is that I find that I'd like to make sure that as you are looking to work with a direct lender in this space or a consultant in this space, that you have the necessary tools and advice of what a lender is looking for in efforts to go through your request. I should have also probably mentioned this at the beginning. I myself, Robert Kerr, I'm a 20-year commercial banker. I actually used to run a bank called Opus Bank's business banking department. And so my experience in lending is pretty vast. And therefore, I like to be able to have that information be put to others as well. One of the things that I find when you go to applying for a loan is making sure that you know exactly the type of loan that you're looking for. I found this is kind of an important part. I find that when most people come to me, they don't really understand that lending is often a tool that they can use. Partly, I think, is because they think that the banking community, as if you know, is not currently lending. However, there's a lot of folks in this industry that have raised private funds that are cannabis and hemp specific. And there's also, of course, a lot of groups that I would say that are just private lenders that are willing to lend to the industry. However, are looking to have these requests put in a format that they're used to. So making sure that you know exactly what you're looking to loan for. So if you're looking to purchase a real estate asset, make sure that you focus on that asset and give the particular details on that. The next thing I would say is extremely important is use of funds. I found that a lot of folks, when they come to me, have a very generalized idea of what they believe that they want to lend money for. However, they don't have an idea of what that exactly is. So a very detailed use of funds. So I have found that a lot of folks use the word working capital very liberally. And I would say that would probably be one of those use of fund documents that would probably want to be pinned down just a little bit more. Some examples of that would be if you have a pro forma and you're looking to be able to borrow some money, what exactly, if you're looking to hire folks, if you're looking to put some money in marketing, if you're looking to be able to help offset some of your cash flow, you should break that down in a working capital quote unquote request. The next thing is that showing your lender projected financials with the income that you will have from the company. So one of the pitfalls I've seen in the space is that people come to me and they have projections that they believe are going to be viable for their particular business. However, I found that they don't put in the timetable for once the capital is received and pitfalls that happen. A couple examples I've had recently in the last couple of years is, you guys all know, when you became a cannabis company, you probably also didn't realize you were going to be a developer at the same time. And one of the folks that I've been working with, they had an example of where they had a fire system that they needed to put in. And as you know, extraction companies often need a suppression system as well, depending on what method of extraction you chose. And it took 12 weeks just to be able to get the fire department to be on board with that. So I keep that in mind, that part of your use of funds is to help offset some of those issues that happen in the cannabis space, that even if your professionalism and business manner is all there, you're still working, as you know, not only with the licensing board of your county and state, but also, of course, quasi-governments as well that can prevent and put a lot of barriers in place. So just keep that in mind as you're going through that process. As I move to the next section, one of the things that I find that has been very common in all different types of the cannabis lending is knowing what types of documents that is going to be requested. I have a list here today of some initial operating agreements. One of the things that's, as a lender, we find is important is that you're not only registered with the Secretary of State that you are going to be operating in, but of course you have an operating agreement or stock bylaws, so we understand how your company will function. And then another set of is what I'm going to call more financial related documents. Those documents are, from our experience, not just crucial for the purpose of your financial request, but these are also documents that you're going to want to have access to constantly on yourself, just for the fact that you as a business owner should be reviewing these on a monthly basis with either a CPA, CFO, a controller, someone that you've designated on your team. As you know, there's a lot of financials in this space that have had to be created due to some of the federal regulations that have been put on this industry due to the federal illegality. And I respect that and want to make sure that you guys are getting the most benefit of those things by, of course, having your direct COGS related to those items. However, I find that not just being creative with financials is something that I respect. At the same time, you want to make sure that you're putting it in such a way that you review those, because net profitability is also going to be an important piece for moving forward, depending on the type of lending you're looking for in the future. A lot of investors in this point in the lending model have chosen to lend to this industry simply for the fact that they believe that it's a good opportunity, but they're looking for financial stability as well.
You all have to connect with Robert if you have questions. He is beyond an expert in this space. We have really enjoyed working with him with several of our clients.
My name is Avi Jory. I'm the founder and chairman of Elements by Mitzi Biopharma. About us, well, Elements Incorporated is a Nevada C corporation since 2016. We entered this year into an exclusive licensing agreement with Mitzi Biopharma of Canada, a pharmaceutical company, and an industry leader in developing formulated phytocannabinoid medications. Our license encompasses Mitzi's proprietary formulated consumer products, non-prescription drugs, with implied therapeutic and prophylactic efficacy. We're basically managed by a team of Canadian, US, and Israelis. Our strategy is giving consumers early access to MedC's innovative treatments without waiting the usual 4 to 6 FDA years. And how do we do that? By combining robust science, clinical evidence, and precision marketing. With who are we doing this? Well, Mitzi Biopharma is our science, and Cannabis is the company that's leading our marketing strategy. A bit about Metsi Biopharma. It's an Ontario Canadian corporation, active since 2016. It develops pharmaceutical-grade, FDA-regulated phytocannabinoid medications. Since 2017, it's in exclusive agreements with the State of Israel's ARO Medical Cannabis Research Lab, headed by Professor Hinani Koltai. Primary contract is for the development of skin oncology and anxiety-related conditions. Clinical development collaboration has been done with Robin Medical Center in Israel with Professor Emilia Hodak, Director of Dermatology and a world leader in skin cancer research. Marketing, it's done by Canby. Canby is an industry leader in media and marketing with over 200 million monthly subscribers and 40 million engaged users, 35 digital publications. And we're building a brand of elements based in marketing through social media, targeted marketing, of key opinion leaders, trials, testimonials, and international distribution. And the marketing is basically built on a strategy of entering with anchor products. In our case, skin oncology, targeted groups with unmet needs. How does that work? Well, our two anchor products, one for Metsi, it's a clinical drug for CTCL. It's a type of skin cancer. It's an orphan disease. It's a disease with unmet needs. And in elements, it's a nutraceutical called Onco Relief. We can't make a claim that we're actually curing CTCL, although Metsi will do that within the next few years. We're doing symptom relief of this same condition. This is an enormous market with over 1.6 billion in revenue estimated by 2025. The other condition is a Metsi clinical called actinic keratosis. That's a pre-cancer, very common known skin cancer. In elements, it's a nutraceutical called Onco Protect. Again, this is a $9 billion industry by 2022, with around 58 million Americans suffering from this type of early stage skin cancer. Other products that we're doing are pain, anxiety and sleep disorders, gout, IBS, obesity, women's health, and more. Our capital raises for $2 million with use of proceeds pretty much divided half between marketing and half to product, the rest to management and to running the operation. Our targeted revenue for 2021 is around $15 million US. And thank you very much.
That was fantastic, Avi. Thank you so much. Okay, and who do we have next? We have Hush. All right, jump in, guys.
Hi, my name is Dylan Galinsky, and I'm the CEO and co-founder of Hush, a company on a mission to rid the world of secondhand smoke. Joining me on this mission is my co-founder, Lenny Prague, alongside a world-class design team who over 22 years have worked with powerhouses like P&G and built products that have generated $1 billion in revenue. Together, we've built functional prototypes, launched pilot studies with the third largest tobacco company, JTI, and are ready to go into production this year. Here's how the mission started. Anytime you smoke a joint, you know you're gonna get tons of smoke, tons of odor, and tons of people noticing. It's impossible to smoke in public without it affecting the people around you, and any indoor public place is off limits. Even when smoking a vape, you're still getting lots of smoke and lots of odor. But what if you could smoke anywhere you want without drawing any attention and without it affecting anyone around you? That is why we created Hush, a filtration device that eliminates smoke and odor and takes the stress out of de-stressing. Whether you're smoking concentrate or dry herb, our solution works in 3 simple steps. First, insert the herb, then inhale, and finally exhale back in for full elimination. It works so well so that we can put it next to a fire alarm and it goes completely undetected. Here, let me show you. And now you know why we call it Hush. You all know that the cannabis market is huge, but our product has cross-market capabilities. Using the same technology we built for the cannabis industry, we have already designed a second product that we will introduce to the tobacco industry by the end of next year, drastically increasing our market opportunity and opening up the doors to becoming a $1 billion plus business. Using a razor and blade revenue model, we make money in 2 ways. First, we sell patented devices. Second, we receive recurring revenue through our filters. Hush V1 is hitting the market Q1 of next year, focused on the cannabis consumer. Hush V2 is hitting the market Q4 of next year, and it will be targeting both the cannabis and tobacco consumers. A true crossover product that works with hand-rolled and factory-rolled cigarettes and joints. We have domestic and international IP, which are focused on 4 key components: airflow, ignition, filtration, and smoke tracking, all which are essential to the utility of this product. We're raising $2 million at a $10 million pre-money valuation to get us to profitability within 15 months. The market is moving quickly, and so are we. If you're interested in learning more about the opportunity, I look forward to chatting with you in our exhibitor booth. Thank you.
Thank you. Coming up next is Fastball Capital.
All right, good afternoon. Thanks, Holly and Jason, for setting this up. Second, I apologize in advance for any dogs or kids that show up. My wife had to go into her classroom today. It's teacher work day, and it's the first time they've gotten out since schools have been shut down. So first, about our projects. I'm a partner with Fastball Capital, and I'd like to cover 3 specific things today, including information about our project, our team and capacity that sets us apart, and what our final needs are. Our project is the acquisition of a cultivation and manufacturing license in Nevada. Based outside of Las Vegas and Henderson, we selected this site after looking at 16 different options. We've had the proven capacity to cultivate more than 10,000 pounds a year in our facility. It's only 2,000 square feet at a sub $300 per pound price point. Given those metrics in Nevada, that's a $20 million gross a year and only utilizing 20% of our available space. In addition to the cultivation side, we also have 4 companies looking to lease manufacturing space, 4 companies looking to buy raw and finished goods, and a team in place looking to expand the branding and marketing penetration in Nevada, as well as a plan to go nationwide as our cash permits. Now, our team, as we all know, is important. With over 80 years of successful entrepreneurship, our 4 partners have worked in industries as diverse as distribution, manufacturing, research, medicine, financial, agriculture, and obviously cannabis. Award-winning in various industries from financial and education, and most importantly, agriculture sustainability from South by Southwest. With partnerships, ownerships, consulting work, and operations actually active in more than 10 states with the federal government, the DEA, USDA, FDA, and DOD, as well as some international partnerships in multiple countries, we are actually choosing to expand our solo footprint in Nevada on a separate, wholly owned licensing venture for cannabis only. And finally, our need. We currently have commitments for the total acquisition price over the next 3 years in cash. We also have an investor willing to bring up to 50% of the amount of equipment that we look to finance, up to $3 million. Our goal is to find an equity investor or a debt or equipment financing for $2 million for 20% ownership in the venture, and a capacity to expand that to $6 million of debt to expand our cultivation 2 times as fast. We're open to a myriad of options, be it ownership, be it assets, first on assets, revenue shares, warrants, future options, potential personal guarantees are available. I'd love to do a deeper dive on it, do a full pitch deck, full pro forma review, full experience review with everybody, and answer any questions that you might have. I'm turning my sound back on right now because there was a lot of dinging going on. I apologize. Once again, thank you for your time today. And Jason and Holly, thank you so much for setting this up.
Scott, that was absolutely perfectly timed again. So thank you so much. Thank you.
So I think coming up next is Butter. And we'll move right along if you're in there.
All right. So my name is Chris Clampkin. I am the chief executive and co-founder for Butter. Our council would ask that we read this to you, but we only have 3 minutes. So I ask you that you take a screenshot and we'll move into this. Butter is a Michigan-based pre-revenue organization with an amazing team, organization, facilities, licenses, and capital set to launch. Butter will be a vertically integrated cannabis organization dedicated to bringing superior quality product to market, delivered in a personalized and consistent manner, and as a beloved brand. We are going after big human needs with this substance, aligned to a core problem we see in the marketplace, which is that consumers are very undereducated in their pursuit towards cannabis. Our core why, everything we do as an organization ladders up to our why, which is that we seek a better understanding of the substance. What we're doing is delivering a simplified product, and how we're doing that is educating with transparency. What you see on screen is a prototype for our packaging. This was created by our head of brand, who owns all things physical and digital for Butter, who also invented the vitamin water packaging, was a big part of that, and led branding and packaging for Coca-Cola for over a decade. So quickly, I'm going to take you through the Michigan opportunity, our operations, starting with flower first, who we are, and our funding to date. So the Michigan opportunity is massive. Michigan State study came out about a month ago that stated this is a $3 billion market on the horizon with a need for 1.25 million pounds of biomass per year. We're a bit larger than Colorado, and we have the second largest card-carrying state. We're now recreational as the 10th state in the union. Butter is uniquely positioned. We started out in the licensing process very early. We have the opportunity to be one of the first vertical operators, fourth in line. There's only 26 licensed cultivators to date producing recreational cannabis. We're set to launch with our current facilities, which isn't supported by a sale leaseback on our 42,000 square feet in the city of Flint. So our path to vertical. We're starting with our indoor craft cultivation first in the city of Flint, followed by unique partnerships that we're bringing in unique IP from out of state, leading with a cannabis edible brand out of Colorado, a leading edible brand, followed by our retail operations in the city of Berkeley, followed by extending our product line in our own lab, and all while increasing margins vertically and maintaining 280E best practices. This is our 42,000 square foot facility, which we put $500,000 into and secured 2 term sheets in the form of a sale leaseback, supporting the complete build out. We also have a facility under contract, which we will have licensed by September 25th of this year in one of the best retail locations in the state of Michigan, capable of producing more than $2 million in revenue a month. Thank you, Berkeley. They're only giving out 3 licenses, and we have the leading application in. The team. So Tanay Cam exited a company called Trike, which had the Reef on the Las Vegas Strip, one of the top cultivators in the country, scaling over 500,000 square feet of commercial cultivations. Alex Center leads our everything physical and digital, having created the vitamin water packaging and then leading all sports drinks for Coca-Cola for over a decade. My name, Chris Klampkin. I'm the co-founder here and chief executive, as stated a few times. I exited my first software application, Golf Match, to Top Golf, which was my first successful exit. Danny Amori is our chief compliance officer and co-founder. He's achieved all of our 11 licenses to date. Jamie Ferroli, head of partnerships and founding member, who has put brands on thousands of shelves from Maine to Florida with his family company. Funding to date, we've raised over $2.5 million in cash. Our current round, we're asking for $3.5 million. In our current A round, which we've secured $1.475 million to date. There's $2 million open. This is in support of the strategic sale leaseback on our facility in Flint, which will launch our brand and vertical operation. Thank you very much. I appreciate the time.
Thanks, Chris. Very impressive team, very impressive concept. Coming up next, we have thought leaders.
I'm the CEO of Thought Leaders. We're a global opportunity. We have no intention of entering the United States market until it's legal. However, we have deep experience with the FDA and with Congress. I was the author of the Prevent All Cigarette Trafficking Act. We're focused on reduced risk products, developing a IP portfolio, and we have no plans to enter the farming business. We look at them as political partners. We will also partner with independent retailers and distributors. However, it's our intention to do e-commerce ourselves. We are clearly focused on reduced risk products. We're a branding company and a product developer. Let me see if I can go down here. We have a management team that's second to none. Behind our management team, I'm advised by senior executives from the tobacco industry, the snack industry, the beverage industry, and people that serve on those boards. But I think our CPG experience is second to none, and I'd put us up against any global CPG company. Let me see here. We've made an investment in a company in Israel called CTH. They have a patent pending product called the Cube. It's different than any other product on the market. However, it does use its technology similar to the Philip Morris IQOS device, with the exception being that the heater's inside of the consumable, which means you get a fresh flavor every time. We've already commenced an auction for our technology with the tobacco industry. We have no intention of entering the tobacco industry ourselves. We don't want to be governed by the Tobacco Control Act. But the Cube offers consumer flexibility. It's a tamper-free pod. It's been designed from the ground up to be something that would get favorable treatment by regulators. We think that it's a disruptive technology, as does the tobacco industry. The primary reason it's so disruptive, it's very cheap. It also provides a superior consumer experience. In that regard, we think it's a disruptive product similar to Juul without the baggage from health advocates. We think we can probably capture 75% of the inhalable market, or up to between 50 and 75% of the inhalable market on a global basis in the cannabis industry. In the tobacco industry, we think we can capture up to 50%. Again, we're auctioning our tobacco rights off this year. We're expecting to achieve somewhere in the neighborhood of 50 million in revenue this year from the tobacco side. We have a superior team. We have a superior product. We're going to be making other acquisitions with the capital we have. We have superior expertise. We're looking for $10 million. We're expecting $100 million pre-money value in line with the revenues we're expecting to get this year. It would be an interim round. We probably would do no less than a $5 million minimum from investors we consider two. And that's effectively what we're doing. We're looking at doing international market studies on our cannabis side. But again, we're not going to enter the U.S. market until it's federally legal. And in that regard, we're also working with Congress on that legislation. And that's our presentation. Thanks.
Thank you so much, Mark. That was a fantastic presentation.
Thank you, everybody, all five of you for joining. This has been really quite enlightening. So I'll start with Avi and at Elements. And the relationship we have with the Canadian company, MedC Biopharma, is that
same company?
Yeah, so it's not a licensing agreement. It's actually you're just the U.S. operator for that.
That's correct.
Terrific, thank you. How long? And do you have a cost estimate of any kind to get it to be FDA approved, if that's what you need to do to add?
No, okay. So here's the thing. MedC Biopharma is doing FDA path prescription drugs. Okay, so our two oncology drugs, we're about 2 to 3 years away and about $5 to $7 million away. And instead of always raising capital, we've raised already $5 million in the past. Keep on raising more and more funds to fund the clinical process. We can dilute a product and sell it as a nutraceutical as long as we don't make a claim it's in oncology. So we have a diluted product for symptom relief for CTCL and for actinic keratosis, and we could sell it to the market legally without making very substantial clinical claims. And that's how we're going to fund our clinical program. And
ostensibly, it'll people, if it's diluted, they can off-label it and just layer on more times a day.
Well, the point is people that have CTCL are suffering from terrible lesions, and we want to give them relief. I'm getting bombed by emails since we made our PR about a year and a half ago that we discovered a formulation for CTCL treatment. We're trying to find a way to bring the product to people that are suffering from this condition without violating FDA regulations, and this is the best path to do it. It's also commercialization, so it enables us to gain revenue and to support our whole clinical program.
And it's almost certainly not CBD that is the exclusive active ingredient.
No, of course not. Yeah.
Can you tell us which of the cannabinoids is the one that you're focusing on, or is
CBD
there
is
a whole
one out of 6. THC is only a small trace there.
Sounds pretty exciting, Avi. Hush, Dylan.
It's all patent pending, and everything's done very life sciences standard.
Of course, I'm sure it is, Avi. Thanks. Dylan, so I put this in my mouth, I pull on it, and then I push back. There's a flap or something that takes the humidity out. I missed this when you were inhaling. I could only see the screen. Your presentation.
So I realized after I had my video off, but I'll show you again. You literally inhale and you just exhale back in, and it captures everything.
Okay, so just so I'm clear, this is the first time on Zoom that I'm watching somebody toke in real time.
Don't get me started.
Yeah.
So like you could put it next to a smoke detector.
No, I understand that.
Yep.
Look, my mom's the best smoke detector.
Yep. Well, that's how we test. It's called the mom test because it's hard to actually measure smell, right? So what we do is we have testing rooms, and then we'll bring in either literally moms or our friends to come in and be like, nope, it smells. No, it doesn't. And that's how we test. So it's funny you say that.
It's not funny. It's personal experience. What are there costs of ownership? Do we have to replace filters? Other than cleaning, is there some system that I have to maintain?
So
oil changes, so to speak?
There's a filter inside, and this is our reoccurring revenue model. So this is the component that you have to switch. For cannabis, our filters last an eighth. For tobacco, they last a pack.
Okay, so there is a blade and razor model to this.
Yes, absolutely.
Okay, good. That's important to know. So I'm trying to blow through this a little faster than I did last time. Fastball, Scott. You are the nth person entering the Nevada market. And is there an advantage to doing that? Are there people you can step over or leap over or jump on top of, or are you in the queue? Because I know a couple of suppliers down there, and they're not actually doing very well.
Yes. So one of our partners has a previous ownership, a minority ownership in another operation. He's actually selling out of that, and that will enable our transfer to happen much more efficiently, given the regulatory compliance issues that Nevada is facing. As far as market penetration, 4 of the people that are looking to buy from us have bought from our grower in other states, including California, Michigan, and Washington. So they are already looking to acquire our product once we get there. The timeline that is behind that is probably a 4 to 5 month to revenue. The IP behind the build out that we need to do is about 60 days to get there. And our model is every 57 to 64 days we have a harvest. For the first presentation, we don't use clones. We don't use, sea of green. It's a vertical growing that we basically can produce almost 27 times the amount of product in the same amount of floor space as a normal cultivation facility.
Well, that's what I was looking at. I think you said 5,000 kilograms on 3,000 square feet, and that's pretty dense stuff.
Yeah, it's about 10,000 for 2,000 square feet, but we will go 3 levels. But those 3 levels are less than 14 foot tall. So it doesn't need to be a massive, we don't need mezzanines. We don't need a full build out to go high, but it is very compact. And the way that we, utilize the grow is the way that any vertical grower or any agricultural based product would be used. Is that we call the majority of the product and focus on a single cola. And we can provide pictures and documentation behind that. But essentially, you have the baseball bat top, and that's it. There's no the waste, the trim, the extraction capacity beyond flower is minimal. But there is a single center cola that is produced in stacks that are about 9 inches round, right? Not the colas, but like the actual plant. Yeah.
All right, I don't want to take up too much more time on stepping on everybody else's toes. Chris, that was a very professional presentation. No excessive language. That was really direct, excellent, extremely well done. But the part that I was missing is what is the cost to build your grow? You've raised 2 and change. You're looking for 3 and change, and what is the cost per square foot? Can you articulate that?
We're at $173 a square foot, and we have 2 term sheets supporting the sale leaseback of the facility. One's $9.5 million, and one's $5.5 million. And with the 3.5 we're raising in the current round, we'll be able to get either the 20,000 square feet built or the full 42. So we have 2 options, and the round we're raising for now is to support the closing of that sale leaseback. And thank you, Hamish, for the comments.
Got it. The 26 licensees in Michigan, but it's an unlimited licensed state. Do you have any concerns about that kind of thing?
So it's not unlimited. It's limited by the municipalities, and only a handful of them have opted in for recreational. So Flint, where we're situated, is one of them. So you already have 1,400 cities that have opted out. So it's some common misconception. It's not an unlimited license state. It's the state and the municipalities making the decisions, and it's up to the municipalities how many they issue.
Got it. All right. Thank you for the clarification. That's actually helpful.
Of course.
And Mark, 10 million on 100 million. What my question is, which of the low-hanging fruit markets you are going to be looking at? Because you were clear that you weren't going to enter the U.S. with some of the higher risk product. So where are you looking for revenue in the early days?
Well, we're expecting the tobacco manufacturers to prepay at least 2 years royalty for the right to license our product. They also are incurring the expense for the PMTA application with the FDA. And to answer a question you asked earlier, that cost is about $10 million. And so we're looking at them to possibly, 2 years, royalty revenue is probably $50 million that we get this year. Mm-hmm. And we're expecting them to probably invest another $50 million in our company at a much higher pre-money value than what we're offering it at right now. The bankers that we're talking to that are managing the auction, that will be managing the auction process for us, are expecting it will probably sell for between $1.5 and $2 billion. You've got to appreciate that this product has already been tested by the tobacco manufacturers. We already are performing, chemistry, physics, particulate testing according to FDA regulations on this product. We believe that there's a 99.9% likelihood the FDA will approve this product based upon our testing that we've done so far. So we're very optimistic. We also have IP that doesn't violate any other IP out there. And because our product doesn't have to be cleaned, it's just going to be huge. It's going to retail for about $30 for the device. And at that price, our profitability is very high, but it's a razor blade model. The tobacco manufacturers are talking to us right now about buying, say, 1 billion cubes a month, for our product. I mean, just to put that in perspective, they think they can take it to, say, 50 billion annual cubes within 24 months. So it's an earth-shattering product. I mean, this is the new iPhone, except for it's heat not burn, and it's looked at favorably by regulators.
Well, as a Canadian, I clearly have no dog in the race, but with COVID and the destruction of much of the American economy, will these be produced in the U.S. or in some other jurisdiction?
We're probably
50 billion's a lot of units.
Yeah, well, we are in discussions with major tobacco producing our devices in the Philippines for the Asian market and in Mexico for North and South America. And our pre-commercial units were produced in China. And but the Chinese market, we're not going to use the Chinese manufacturers for this because of our experiences.
Got it. Thank you. Off to Merrick and Matthew. Thanks, Merrick, for your patience.
Thanks. And I got cut off for 5 minutes or so. Apologies if any of these are repetitive questions. Just let me know. The first question to Avi: when you think about the approval process, what are some of the key milestones you track, and what's like the key risk in the FDA approval process as you bring some of these products to market?
That's the whole point. We're not doing an approval process for the nutraceuticals. We're taking them as a cannabinoid, non-THC product and bringing them directly to the consumer that needs them without going through the FDA approval process. We're not selling them as a treatment. We're not selling this as a drug. We're selling this as symptom relief nutraceutical. And for that, beyond safety, we are not required to do it any further testing. MedC, on the other hand, has a clinical program over the next 3 years to get this approved as an oncology drug. These are two separate issues. The point is that Elements will be able to create enough revenue for Elements and for MedC in order to enable the launch of eventually of this as a prescription drug. Did I answer your question?
Yeah, that helps. So you have two parts of the business, one part going through the approval process, and the other part, just to make sure I understand, is revenue on the nutraceutical side that should fund the business until you
exactly. Yeah. And this is a unique situation because normally drug companies can't do that. They have a molecule that will require from day one an FDA process. But since we're touching on a non-controlled substance or CBD and related cannabinoids, we're not actually required to go just solely through the FDA process. We can actually sell this as a cannabinoid relief product, a nutraceutical, but let the people that are suffering from CTCL or from actinic keratosis, they can enjoy the benefits of the product without having to wait the whole 4 or 5 years now of FDA approval.
Got it. Thanks. That's helpful clarification. Next to Dylan at Hush. Why did you decide to choose the cannabis market before the tobacco market, and does anything like this exist in the tobacco market today?
So to answer the question, compliance was the reason that we chose cannabis before tobacco, because tobacco, there's the PMTA, it's a longer process, it's more expensive, and we want to get out into market as quick as possible and to turn a profit. So that's why we focused on cannabis, because we don't need any sort of certification for our cannabis product. We sell filters, so we don't sell tobacco, cannabis, nothing like that. So we're pure ancillary. And what was the second portion of your question? I apologize.
Does anything like this exist in the tobacco side today?
No, so there's nothing like this in the market. And the thing is that no one's focused on the exhale and the part about stigma and the secondhand smoke. And that's really like what we're focused on, is that exhale factor that, you're able to eliminate fume and odor. But we hold all the patents, domestic, international. We've already heard back from the USPTO. First patent should be granted within the next 2 months. So smooth sailing from there. Fingers crossed.
Got it. Thanks. Next to Fastball Capital. Why did you choose the Nevada market? And how do you view yourself, differentiated for some of the current players there today?
Excellent question. Nevada currently offers the highest price for flower nationwide, at least in our research and consistent market. This is obviously pre-COVID. The market of tourism in Nevada is far above anywhere else as well. Maybe Florida, secondary. But the way we're differentiating ourselves is price point. We're able to undercut the actual current average price for wholesale and still be profitable. By producing at less than $300 a pound, the race to the bottom is eventual. It's going to hit everybody, and it's going to be a price war. And if we're already combating that by producing more in a less dense space, or in a more dense space with less cost and less overhead, we're going to be able to reach that bottom price more efficiently and still provide a return for all of our investors. The other problem with the market in Nevada that we see is politics. Every 2 years, there's the ability for a board to change and change those regulations. Most recently, there's been a lot of dust up on the most recent round of licenses that went out. The ones that are already in place will not be impacted. The ones that were granted may be impacted, but there doesn't seem to be any change over the next 2 to 4 years projected on new licenses. So there's a limited license capacity for cultivation side and extraction, making that a more valuable point than actual dispensary. On top of that, part of our exit strategy includes about a four-year projection of gaming deciding they want a piece of it. To Bud's place, the presentation for consumption lounges, right now they have to be completely separate. In the next 4 years, we think that gaming is going to see too much of a drop of what they want, and they're going to end up wanting to get into the market. And at that point, we need to be ready to move on from Nevada or Vegas specifically, or be branded in multiple states enough that we're not impacted. So there is a concern, I guess, in Vegas, but it's a 4-year concern, and we plan to be either exiting the market with either an IPO, and it's kind of aggressive, or just a direct sale at that point. But we think there's a 4-year, basically a leeway of 4 years politically, both at the state and federal level, at least before sweeping changes happen at the federal level to impact us in Vegas.
Got it. I appreciate the long-term view on Vegas there, because obviously with COVID, it hit that disproportionately. But taking a long-term view on that market. Chris, great to see you again.
Hey, Mark.
I've spoken to Chris for a long time, and just it's very impressive. Spoke to him a year ago, and what he's built in that time is super impressive, and we're admirers of him and the team. I guess my question for you is, and our view is very positive on the Michigan market as well, just given the limited license nature of it. Being on the ground there, what's your view of how the supply of licenses will kind of evolve over the next few years in Michigan?
Thank you for the kind words, Merrick. It's good to see you, and hope all is well with you and Vikas. So in terms of licenses, it's been slow. My opinion is follow the money, right? So you could see where developments are going on across Lansing, Grand Rapids, Flint with our project, and really just a handful of markets in Michigan. Again, what I said to Hamish before, it's up to the municipality. So like our retail facility in the city of Berkeley, we're up against 75 of the best operators out there, and they're only giving out 3. We've been told by the city that we have all the points. We know we have all the points because we're locals, but you have to have feet on the ground to understand the green zones, to understand the real estate, and to put together a team that gets approved for a license. They gave some runway to us as operators till December of 2021. So you can't just enter the Michigan market without achieving a licensed facility on the medical side. So we had runway from January 1st of 18, when this all changed, to December of 2021. So Merrick, to answer your question directly, on the ground, it's still slow. The black market is still overrunning the market. There's really only about 5 actual producers with more than 1 Class C cultivation license, which, another point, Hamish, on your question, it's also limited by a plant count. So although there's unlimited licenses in some of the municipalities, you're limited by a plant count, which ultimately limits what you can do in your square footage without a very high cost to that associated operation. I hope this is answering your question, Merrick, but the market is huge. It's a 7 million person population over 21. There's a $3 billion market on the horizon, and you still only have a handful of producers. And more importantly, you have a California market that's very mature with not a good amount of quality flower, in my opinion. There still is a heavy demand for quality flower. Michigan is the complete opposite, meaning there is no quality flower, in my opinion, to date. And people are still optimizing their facilities and learning how to grow at scale. So, to throw a little, quick one on butter, we have one of the top cultivators out there that has survived and succeeded in Nevada, in California, and Arizona. And having that expertise really takes you a long way in this state in terms of commercial cultivation, because there really just are not a lot of commercial cultivators yet. And that is really limiting the production of quality throughput. So very limited in terms of biomass that's available. And our biggest competition is really money and the black market.
Got it. Thanks for that. And then last question to Mark. So it sounds like the market potential is huge. You've de-risked a lot of the project through your partnerships and relationships. In your mind, what is how could the project go wrong, and kind of like what keeps you up at night as you think about the market potential and getting from pre-revenue to commercialization?
Well, really nothing keeps me up at night, to be frank about it. We have most of what we need in place right now in terms of the quality of people. I occasionally, I guess, might worry about possibly violating federal law in some way that might hurt us down the road. But we're, doing everything internationally right now. Outside of that, we just don't want to get ahead of our skis, and be in the U.S. market too early. We think a lot of people in this market are going to regret being in it pre-federal legalization. We're working right now on developing our consumable so it's biodegradable. That's probably the only part of our project that isn't completed yet. We think it'll be done probably in the next 90 days, though. That's the last piece.
Got it. Thanks. I'll turn it over to Matt. I think I hopped in front of him there.
No, Merrick, I'm so glad you did. And you guys, those were wonderful questions. I've enjoyed listening to everybody's response. Holly, Jason, if you'll allow me, maybe we'll just utilize these great questions and answers we've had so far with going straight to judges, because at Arcadian, we're a growth investor. It's a little bit more difficult for me to ask intelligent questions with pre-revenue businesses anyway. So maybe in the interest of time, I'll just thank you all, encourage you all as pre-revenue companies. What we see a lot from some of the larger funds is you tend to move along the value chain with respect to the growth of the industry. And so pre-revenue companies is where the magic is. As an equity investor, it's where the magic is. So this was a lot of fun for me to pay attention to. And I hope that in your next rounds, when you have some underwriting there, you'll think about Arcadian to be a part of your journey.
Excellent. Thank you so much, Matthew. All right, everybody, are you ready? We're going to launch the poll. So which brand would you most like to invest in? We're looking for the pre-revenue Oscar. And the poll is launched now.
Again, a tie. Hush and Butter. You guys pulled way ahead.
And by the way, there's some great companies here. This was a phenomenal round of presentations. Really encouraged by everyone's concept.
Perfect. Thank you guys. Thank you guys for all putting this together. Can you hear me okay? I hope so. Anyway, I'm Jason Martin. I am the CEO and co-founder of Tree of Life Seeds. We're a hemp company based in, we're in Little Rock, Arkansas, where we're headquartered. We started the company outside of Denver, Colorado, back in 2015. We started as a genetics provider, hence the name Tree of Life Seeds. We created cherry wine, which is one of the most sought after CBD, high CBD cultivars that's used in the industry today. My partner's background is farming and agriculture, so that was our play initially. From there, we've become vertically integrated. 2016, we actually began to do extraction. 2017, we began doing private labeling and for other brands. And then when it came down to it, we decided there's a lot of noise out there in the industry. So we decided to create our own product line that includes tinctures, it includes soft gels and all of the different products and topicals and things like that are in the industry. We use a patented process in our process. We're the only company, or we're the first company in the U.S. to get a PVP, which is a plant variety protection patent on an industrial hemp cultivar. We've got a lab right now in Arkansas that we're currently in the build-out process. We've got all of the equipment there. We've got, last year we did just over 2.7 million in revenue. We've been profitable since we started the company back in 2015. We've been profitable every single year. We've really ran out of cash flow. And the fact is that if we didn't have the money, we didn't spend it, and we've grown the business that way. Now we're in the process. There's a lot of opportunity in our space, and we're in the process of trying to raise some capital. So right now we've got a 3.5 million need right now, and that'll complete our lab build out. We've got all of the equipment and everything already in the building. We're building to an FDA GMP ISO certification currently in the process. Our throughput, we can do just over 11,000 pounds of hemp biomass on a daily basis. And that's a full throughput all the way through to a full THC-free product or broad spectrum oil or a full spectrum oil. We can do all of those things. We can build products for others, or of course we have our own product line that we've been doing successfully for quite a while. So current needs 3.5 million. We've got millions of dollars in assets. Our current real estate's just over 4.2 million, which we just had appraised. So we're looking good for investors that want to get in and take advantage.
Oh, fantastic, Jason. Thank you so much for sharing with us. Who do we have next, Jason?
I run the website Cannabis.net. It's one of the bigger cannabis platforms out there. Quick history, I got the URL, which is the really important part of this story. About 5 years ago at auction, I noticed that the Ghost Group, which you guys know as Weed Maps, was buying up marijuana.com, cannabis.com, marijuana.net for $5-6 million each, and kind of creating a Google monopoly on traffic. And it's our value proposition that in the end, this is going to be an Amazon model. You're going to order your cannabis by your phone or your app. It's going to be delivered maybe that day or in 2 days, and that the winner is going to be the one that can create an order for a penny or two, not $35 to $40 as it is here in Massachusetts for a dispensary for a new client. So traffic is going to be key. Domain authority is going to be key. Building out a platform like we have to be the Amazon of weed when the time comes is important with sales funnels. And our goal today, and the reason I came on, was that we're at you're seeing the margin compression as some of our other pitch people have discussed in their businesses, trying to find extra revenue and margin. We think that we're the top of the sales funnel. Cannabis websites and media sites, which we're creating, are kind of the ugly stepchild right now until legalization, because we can't sell cannabis. We can hand off an order, but we can't sell it directly. The moment that changes at midnight of whatever day it's going to be here, we become $100 million profitable type places as soon as we can take that order and either distribute it within a state with warehouses or ship it across a state line if the FDA and post office are removed from the equation as federal offices. I got the site again 5 years ago. I've been building it out, knowing you can't buy advertising. Some of you might not know that in this niche, so everything has to be kind of organic and through social media. So we have full mapping like Weed Maps and Leafly for dispensaries, doctors, lawyers. We do a lot of content, a lot of written and video content for Google Love. We have a full cannabis social network, kind of like your Facebook of weed, where people want to put shots that they may not want to put on Facebook for work reasons or other reasons. We developed a CBD store. We do not have our own brand of CBD. We just deal with drop shippers that have lab results. We have a full cannabis job board that's been up there for 5 years and ranks very well. We saw the trends and the analytics going toward that. We also have our apps have been approved in Google and Apple, which is a tough thing to do nowadays, as people are finding out we're grandfathered in there. And we have an events page as well for calendars. And right now we see the opportunity with the margin compression, where the greatest opportunity in the next year or two is going to be at the top of that funnel, not where the product is made. It's a commodity as opposed to, something that needs to be in the Apple store. And if you can get those orders in and get them funneled through your system, that's where you're going to protect your margins. That's where you're going to see a lot of action. And right now, you may be starting out with like a drizzly model, if building up traffic and handing off the order, but in the end, you're building out, trying to be that Amazon and delivery. We have just started a new media company with Pro Cannabis Media, and we're introducing our platform to get more users on Apple TV and Roku soon with news shows. I got to stop there. That's 3:05.
Fantastic. Thank you so much, Kurt.
Thank you very much. My name is Willem Jonker, and I'm the founder and the chief thinker at Medigrow Africa. I grew up thinking of America as the land of the free, but when I got involved in the cannabis industry, I quickly found out that America is the land of the regulated. At the federal level, the state level, the county level, and the municipal level, most of the discussion this evening has been about the regulations. That's when I appreciated the fact that I live in Africa. This is a continent where I can phone a cabinet minister and I can sit in his office 45 minutes later. Medigrow Africa, the company that I founded in 2015, has assisted many of the African governments in drawing up the regulations for their industries in exchange for being part of the first round of licenses in their respective countries. This has proved to be a winning strategy. We now have investments in 8 companies that are licensed in 3 countries, and with 21 applications pending in a further 12 countries. Medigrow Africa is by far the largest collective of African cannabis businesses. We are raising a minimum of $6 million and a maximum of $35 million in equity capital so we can roll out further sites. At the top end of this range, investors can get a controlling interest in Medigrow Africa, and you will then dominate the African medical cannabis industry. If you like the technologies that you've heard of in the other presentations this evening, you can bring them to Africa. And then you can benefit from the lower labor costs, lower land costs, lower regulatory costs, in fact, all lower costs, all permanent cost advantages. Then you can be in the lower quartile of production costs, which will mean you will be in the upper quartile of profitability. Our motto is European quality at African cost. Europe is Africa's natural trading partner, being in the same time zone. Europe has twice the population of the USA and Africa 3 times. If you want to address this 5 times larger market, your base, especially your cost base, should be in Africa. Why would you want to invest in America, which is so crowded, when you can invest in Africa, where we know all the producers by name? I'm looking forward to seeing you in the Medicare Africa booth. Thank you.
Oh gosh, thank you so much, Willem. And again, if you have any trouble getting on the booths, just contact Jason or Holly at Cannabis10x. We will make sure that we make all of the introductions that you would like, and that you're able to see all of these fantastic brands for whatever your interest is, strategic partnerships, investments, etc.
Hello, I'm Robert Calkin, and I started the very first branded marijuana delivery service back in '88, and I also started Cannabis. And I'm from Adelanto. Adelanto has become the mecca for cannabis. We have 12 vertically integrated licenses. I have a very unique turnkey opportunity that revolves around this vertically integrated company, MJRX, which is comprised of engineers and architects, and we have our own construction team. So we've already built our own buildings. We've built a beautiful dispensary called the Jet Room. That's where I'm broadcasting from. And we have a property that has manufacturing, distribution, cultivation, licenses, and we have 2 buildings that are 40,000 square feet that we would like to bring in investors or a brand that wants to expand into California, or maybe you're already in California and you just need more space, or you need a management team to run your operation. But we've for 3 years now been successful in running these licensed operations here. And with the full cooperation of the city, we are really doing well here. And we were one of the few cities and one of the few dispensaries that did not get looted out here. So from an investment standpoint, I would think that'd be a plus, but we're in a very safe area. And these 2 buildings that I'm talking about are 20,000 square feet, and they already have cultivation and manufacturing and distribution licenses attached to them. So we just want to get a partner to come in, build the buildings, and it's pretty much, as I said, a turnkey operation. And if you needed to do any manufacturing or cultivation while you're waiting for the buildings to be built, we have already operational facilities on the same property. So we would just be building a building that looked exactly like one that we'd already built, and with a construction team that had already built that. So we have all the metrics, we have all the forecasts, we have all the success stories that you need to see in order to be confident in investing with us. So I'd love to have you come out, do a tour of the properties, show you the opportunities. Again, any brand that wants to manufacture, cultivate, or distribute here would be instantly able to do that if they partnered with us. So the investment on 5,000 square feet, if we just wanted to start with that, would only be 1.2 million, and that would yield your money back within a year and a half. Same goes with if you wanted to go for the whole 40,000 square feet, which would be about 8.2 million. Within a year and a half, you'd have your money back on that. So you can start with either 5,000 square feet or go with the full Monty. So that's my opportunity, and I look forward to talking to anybody that wants to come out to Adelanto and partner up with MJRX. We have no debt. We're all self-funded. So we really don't need investors, but as a time line, we'd like to get started as quickly as we can on these properties. Eventually, we'll build them ourselves.
Thank you, Robert. That was fantastic. We really enjoyed that presentation. We enjoyed all of those. Our colleague from the lodge had an emergency that he had to take care of, so he will not actually be able to pitch today, unfortunately. So we'll try to bring him up, and if anybody's interested in that opportunity, Jason, you want to give them just a quick overview?
Sure.
But this won't be voted on.
Yeah, sure. So the lodge is a cannabis dispensary multi-unit operator in Colorado. who's expanding, looking for strategic partners with large equity stakes that want to finance the growth. He's actually one of the operators that has a substantially higher EBITDA and a substantially higher revenue, which makes it unique. His operations and his product placement is head and shoulders above much of the competition in the state. So it's something interesting to take a look at. So I'll just kind of leave it at that. And you can contact us to get in touch with him directly. And at this point, I think we'll turn on the poll.
All right, ready for the last poll, everyone?
We've ended the poll, and we have the winner coming in at Medigrow Africa. That is the favorite, and coming in second, third, fourth, and fifth place. We're gonna have to send that to you in email. We'll let you share that with the judges to ask a few questions to everybody here. If you want to, start with Willem. Yeah, go ahead there.
Hi guys, Hamish back. Back in order again. I'm a tiny bit confused with Tree of Life. You're profitable, but you've run out of cash. If I was to invest, I'd need to have a significantly better understanding of where the cash was deployed, so I understand where profits will go in the future to know how and when I'm going to get out. And the second question I would have, Jason, if I could, is you're building to ISO standards. Have you given any thought to building to EU GMP? I asked that because in Colombia, Pharmacielo went with ISO as opposed to what Chiron did going EU. And so it makes a difference to how one expands the market and which standard one grows to.
Yes, very good questions. So we're not out of cash. We are motoring ahead. We're just in an expansion phase right now, and we need money to finish the build out of our lab right now. We are currently building out our facilities that we manufacture our products in right now are GMP and FDA certified. Now, obviously, you can't be FDA certified for the hemp or cannabis industry, but we are FDA certified. We manufacture other products there across other industries as well. So the project that we're building out right now is the 3.5 that we're looking for is to finish the construction on our current project. That's 1.5 million for construction. We've got a little over $1.5 million into the construction at this point in time. And $990,000 pays off the facility, the ownership of the building and land. It sits on 5.5 acres itself. We're looking at this from an expansion standpoint to be able to be a larger. The system is we sell seeds to farmers. They grow hemp. The big bottleneck in the industry this last year in the hemp industry was the processing side. We're closing that loop by upgrading and building a much larger processing facility so that we can turn that biomass directly into an oil product, whether that's a broad spectrum or a THC-free spectrum in large mass quantities. And we can actually, process over 4,500 kilos a month in a tea-free oil. And that's where we're using the money for current expansion in our brand to be able to continue the relationship that we have with the farmers on the front side. We are building out our current lab to the same standards, FDA and GMP. We've not looked into the EU GMP.
Thank you. I just had to quickly unmute again. For Kurt at Cannabis.net, I'm friends with the guy who owns marijuana.ca. And so the idea is how to exploit that kind of URL. I am anxious by many people, including the guys who had a magazine up here in Canada that was supposed to be dedicated to cannabis. I get confused about becoming the Amazon of weed when it's legal. Amazon perhaps ought to be the Amazon of weed.
That's one argument, is they could jump right in. But if you look at the U.S. model for their pill pack they picked up and their prescriptions, that hasn't exactly, when the announcement came out, the CVS's and the Walgreens stocks would drop. But certainly Amazon isn't your go-to pill guy right now. It hasn't taken over. I think there'll still be room for players in that space. And obviously that could be an acquirer if you reach a certain level. But then again, they're going to be looking at what would it do even with a federal law change to their other businesses, especially with this administration. They may not jump in quite as early. So there may be some runway time for other companies to take that space, or some of it.
Well, that makes sense. And just for the record, I have spent some time on Cannabis.net and know that the content is really quite good, and it is differentiated, and you can learn a lot about what it is you're ingesting and why you're ingesting it.
Thank you. Yeah, we try to do something different, opinion pieces, live news shows. Try not to just repeat, what everybody else is rewriting in a press release. So thank you.
So Robert, after a while, we did get to hear your presentation, but and Holly is doing the very best everyone can with this technology as we're all learning how to do it. Can you tell me what your exit strategy is, in the sense that the business model sounds viable? How do I cash out, or how do I get out of the deal in the future?
Well, our strategy has always been to be the last man standing. So 2025, 26, we're going to start being approached by all the major pharmaceutical companies. So our portfolio has to be as strong and as far-reaching and with as much IP as we can get together by that time. So you'd be part of a winning team. And, we're working on some projects that are even at a federal level. So being part of our properties and our facilities, you'd be naturally included in those opportunities too.
All right, that makes sense. And for Willem, as you may or may not know, I'm actually acquainted with your projects in Lesotho and SA. I've been out to your lab in Maseru, and I've been up in the mountains to see your facility, and so spent some time with Andre and Francois and Andre's dad. And so I have a slight bias to what MediGrow is doing, because they are, without exception, the most credible of the cannabis producers on the entire continent. And for the record, I don't have any equity in them, so it's not like I'm kissing up to Willem. It's just that they've done a pretty extraordinary job so far. However, Willem, I still have a majority interest in a Lesotho license myself, and for us, my observation is that the biggest hurdle that we're now addressing, of course, is capital to continue to build, but the credibility of the local governments, the jurisdictions in both SA and Eswatini and Lesotho, to regulate the industry in such a manner that importing countries will trust the product coming from Africa. Because Lesotho has not done what it could or should have. Eswatini have completely parked on the sidelines. SA is moving forward, but challenged politically. I'm just curious what your strategy is to make sure the government's regulatory models are effectively implemented in such a manner that Health Canada and the Commonwealth of Pennsylvania and B-Farm in Germany can trust the product coming out of your jurisdictions.
Yeah, that is very important. And I think what we have done basically is two strategies. The first one is MediGrow Africa has, as I've mentioned, straddles many countries, so that we reduce the political risk and the country risk by doing that. And thank you for the compliments on the first site, which we've done, which is in Lesotho. The second thing is we've worked, and we are working very closely with these governments, because you must remember, for all of them, it's a new experience. They are scared. They don't know how to do it. We take them to the International Narcotics Control Board. We hold their hands. We give them the regulations. We show them these things. And then we also work with the customers, because, if you are a sick patient, say in Germany, and somebody tells you your life-saving medicine comes from Africa, that's quite a big step to trust that medicine. And so we have to do that work to actually educate and also promote our product. And it will only be through quality that works. And that's why we focus so much on quality, and particularly, and you mentioned it earlier, the European GMP standard.
Excellent. Well, thank you to everyone here today. That was these were excellent all day long, and particularly in this last group.
We've got Michael Hutner coming up.
Hi, thanks for having me on. So good to connect. And good to see a lot of familiar faces of Matt and others. I'm excited to be joining you all here today. So I work with Young America Capital. We're a 65-person investment bank, a broker-dealer based out of Mamaroneck, New York. I'm here in Boulder, Colorado, at home here. Beautiful day, and lucky to be here. So, of the 65 folks at Young America, it's grown. There used to be about a handful of us that work on cannabis and hemp deals. Now there's upwards of, I was going to say a dozen, but we probably have about 14 folks that work on cannabis and hemp deals as their primary area. We tend to focus on the lower and lower middle market. So we do raises, both equity as well as debt. And we've been doing a lot of M&A work as well. So if folks are interested, I tell you, while I'm happy to give some advice, we just find that the pre-revenue companies, for the most part, are challenging, especially now. So I don't want to create some sort of expectations. If it's pre-revenue, I'm always happy to give a few pointers and some pro bono advice in the hope that you'll be successful. And as you build revenue, we could probably be more helpful down the road. Most of our work, we tend to either raising equity or debt or doing transactions between roughly 10 to 20 million. And, happy to talk with a lot of the folks that were here today that have a lot of great offerings. I was brought on, I thought, to end this, I wanted to give just my observations on why I'm bullish on the industry. I think a lot of you are as well. And I thought where it's helpful is it cuts across all of your opportunities where you can bring up one or more of these points as a selling point on why it's going to get better down the road for most all of our the companies discussed here today. Let me mention, I'm a person that likes to make lists. So I kind of put together my top 10, although I've added one or two, but let me just go through some of these observations and see if they're useful to you all. The first is, and I thought of these chronologically, kind of going backwards to last year and then looking forwards through November, through the elections, and then into 2021. So in terms of the past, I think the few things that have been helpful to people that are still now either getting into the industry or have survived here in the industry is that the first one is that the valuations are more in line than they were before. And most of us saw this the tail end of last summer, where a lot of these publicly traded companies on the CSE were completely overvalued. And now there's been some accountability, and a lot of them, their shares are down, which of course is not good for people that were early shareholders or shareholders, but now that they're more in line, it's good for the industry overall because it gives us more credibility and they're really more in line with where they should be than where a lot of them were early last year. So I'd say the valuations, that's the first. The second, which is sort of an odd one, but I wanted to include, is that I'm finding that people are better, the companies are better about their financials than they were even a year or two ago. And that's important. I think a lot of these companies, they kind of think, they sometimes say, hey, I'll get the company worked out. Let's get some revenue on the books. And then let's worry about, making sure all our financials are in order later on when we need to, and we're going out for a raise or we're looking to be acquired. And what I would say is, make sure you take care of your financials now. Think about if your exit strategy down the road involves, of course, an acquisition or so forth, then you're going to want to get, at least a solid accountant and ideally a firm to eventually do an audit. And the sooner you get ahead of that, the better. It's an easy thing to kind of avoid. The third item is really where I think most of this space is going. And as much as I love the vertically integrated operations and the different license operations, I work a lot with them here in Colorado and across the country. It's really about the intellectual property. And, somebody asked me the other day, they had a real successful operation on the East Coast saying, they've got a limited license with a large cultivation and processing. And, but they haven't, it's too early for them to start branding. This was actually a colleague of mine, and I took issue with that. I was like, it's not too early to start a brand. It may be a little bit on the late end to be starting a brand. So what I would tell you is, if you're only going to be focused on the cultivation and white labeling and manufacturing, there's only, as Matt and Merrick and others will tell you, there's a limit to that, where you're going to get a multiple of your revenue and not much more. But if you have intellectual property and you really invest in building out a brand and investing out IP, even if it's not a brand, if it's certain kind of patents or trade secrets, that's the kind of thing that investors seem to be most interested in that I'm talking to. The next one is two pieces of legislation that have already been introduced and have been, a lot of people know about, and that's the Safe Banking Act. I'll go to first, then I'll go to the States Act. The Safe Banking Act, I think there is some hope. I think there's political will. I don't think it's going to happen this calendar year, but I think it is likely to happen next calendar year when it's less partisan political. It's not going to happen this political year because everything's going to be a partisan football this year, and not much is going to get achieved before the November elections. But in terms of next year, I think it's got enough momentum that we should be able to knock it through. If given that I know it's been included as an amendment, so it could be earlier. But I feel good about the safe banking and getting banking legalized for the industry. The States Act, I'm less optimistic, largely because the sponsors, that, as we know it now, are, for example, you have Elizabeth Warren, who may be good on a lot of issues, but the president's not going to give a whole lot of credit to anybody that is a prominent Democrat. So it's not a great sponsor to have. And from what I gather, it really hasn't picked up a lot of momentum. I think the chances of the States Act passing this year is very low. And I'm not even sure it's going to pass. I'm not even sure I'd put a whole lot of hope that it's going to pass in the next year or two as well. I think that the good news about that is, and I'm kind of jumping ahead here, is that there are a lot. I'm not sure we so much need a big federal legislation. A lot of people are always asking about, rescheduling, and as most of us know in the industry, there's advantages and disadvantages to either removing it all the way from the schedule or rescheduling it down to a lower schedule. As soon as you do that, obviously the good side is that a lot of us have been trying to decriminalize cannabis for years and years. The downside, of course, is then you immediately, if it gets to a level where you get folks that have just so much more capital than we do, that if you're just getting into the industry or you've only been in a year or two, you're going to be just walked all over. And, folks like the big pharma, Johnson & Johnson, and a lot of the pharmaceutical companies obviously are looking at this space closely in other countries. And as soon as it gets removed from the schedules, they're going to become the 800-pound gorilla in many of our spaces. So that's just a comment. But let me come back to this November. This November, I think where you really are seeing opportunities is that there's probably going to be largely more states to come online this year, either mostly through the legislature, a couple by citizen initiative. The states that I work a lot with, MPP and some of the other advocacy organizations in the states that we put at the top priority that are likely to go be decriminalized this year or legalized are, of course, the ones that we've been working on for a long time. New York, that's huge. New Jersey, Connecticut, South Dakota has been coming up. It seems real. There's some talk of Mississippi. And the one that seems to be the hottest, because I think they've got the resources likely to pass it, is Arizona, where they're going to go from medical to adult use. The other state I want to mention to folks that I think is perhaps the most interesting is Texas, because if you take Dallas and Houston combined, have more people than LA County. So right now, I think they have 3 medical licenses, and they're fairly limited. We actually are working on possibly selling one of those licenses right now. So, certainly if that's something any of you are interested in, or any state for that matter, let us know. We have licenses both retail as well as manufacturing and cultivation, and most of the limited license states. That's a lot of what we do. But I think Texas is really intriguing just because it's such an untapped market and it's so huge and it's been so limited. And while it might take a while, eventually it'll go along the lines of a lot of these other states, like some of its neighbors, like Oklahoma. And well, I'm not saying it's going to be like Oklahoma, but it's going to be a lot better than it is now. The next thing, and I realize my time's limited here, so I'll kind of pop through these. The next, and probably right now, the biggest thing that's happened for us is the designation in many states as essential services. I think that's a key talking point for most folks that are pitching their companies. These aren't it's not just like this is something that some folks want to do, but now you've got most of the governors saying that cannabis, whether it's medical or adult use or both, is an essential service. And that's just happened, obviously, because of COVID. The other part of that's related is I think you're going to see a shift to more and more delivery and distribution. And I guess that's true with anything with groceries and other areas, nothing to do with cannabis. But what it also means is I think it's going to be a little bit less reliance on brick and mortar stores, at least in the US. So I guess I would recommend, I think delivery and distribution were kind of thought of as a dime a dozen and weren't taken as seriously 6 months ago. But I'll tell you, we have quite a few clients, and the delivery and distribution clients that we have in LA and elsewhere are having as you probably heard, record months. So think about those and how your company ties to those. The last couple items I would leave you with are the elections. Look, as folks that know me know that my background is largely political, working on the Democratic side of things, and I even wrote a book on how to fight Trump. I co-authored a book. That said, until Biden, and he wasn't my top choice, even though I'm glad he's a Democrat, until he steps up some, it's, I can't be here to tell you that he's going to be so much better than Trump. Right now, it's a little bit to be determined. Now, we're going to put some pressure on Biden to step up on safe banking and to respect states' rights. But it's a little bit TBD. What we've seen for years and years from him is not good. So that said, there's enough folks around him that if he were to win, and I think he's the underdog right now. I know people may or may not want to hear that, but I think it's going to be a tough battle for him. But there should be enough people that we should be able to influence Biden. Trump, on the other hand, you kind of know what you're getting, which is some unpredictability. But he hasn't been what a lot of people were worried is he was just going to set loose sessions on the industry, and that would be the end of us. And that didn't happen, and I don't expect that will happen. And if he were to be reelected, that he would crack down, because he hasn't in his first term. And then the last thing I would leave everybody with is that, of course, the industry is brought up just with the folks that just presented is going, is global. So you've got, of course, Canada and the US, but really all of this is going international, and there's huge opportunities because, like, a couple of the presenters here today, there's a huge population of folks that have not yet really had access in Europe and in Asia. And that's only going to become, while they're a few years behind, that's where they're headed. And I think what you're going to see is not only will there be a huge demand, just like there is elsewhere in the world, but you're also going to start to see capital flow in London and in Berlin and in other economic centers around the world. So I think I'll leave you with this. I've always made this bold prediction that I don't think we're going to be waiting, or it's going to be our children or grandchildren are going to see when cannabis outpaces alcohol. My prediction is we're going to see that, and not only are we going to see that in our lifetimes, and I'm 50, I think we're going to see that within about a decade. I think by the end of this decade, by 2030, cannabis in most places will be outperforming alcohol. We're already seeing that here in Colorado, where you've got communities like smaller communities, Breckenridge, Frisco, Telluride, some of these smaller towns where already their tax revenue is higher, cannabis is higher than alcohol. So in short, thank you for having me on here. And if you want to reach me about anything, it's mhuttner, MHUTTNER @yacapital.com. Young America Capital. Feel free, if you forget, just click on our website and feel free to email me, and happy to jump on a call.
Thank you so much, Michael. I know you're going to be getting a lot of questions here in the coming days, and hopefully a lot of good clients that you can steer in the right direction. What you said was monumental. We really appreciate that. I just say a couple of words and I'll let Jason here close. We really want to thank all of you. We had an esteemed panel of judges. We had an extraordinary group of speakers. We had fantastic brands that came to pitch. We want to work with you. We want to create those strategic partnerships, and we're so grateful to all of you.
So I'll just close with, we have a goal here of kind of uniting the smartest players in the field right now. I'd say that my prediction is if you're in here before it's federally legal, that you're actually positioned in a way that some won't ever be able to catch up. And that's, I think many would agree with that. I think I've heard some opinions that go the other way, but I just can't see why that would be the case. So that's it. We'd love to talk with anyone. If you want to, email us at support@cannabis10x.com, or each one of us individually, our first names at cannabis10x.com. So it's Holly at cannabis10x.com or Jason at cannabis10x.com. We appreciate everyone for coming on. This is a Cannabis 10x Capital Pitch event. We'll see you on the next one next month.
July 12th.
And, thanks everyone for coming on.
Thank you all.
We'll talk to you again soon.